Mic check 1 2 1 2. Mic check 1 2 1 2. Can you hear me in the chat? Can anybody hear me in the chat? Excalibur says he cannot hear me. If you can hear me, push 1. Okay. Thank you for the confirmation, Excalibur. And Reigning Woman, good evening to you. Welcome back to the Black Brain Trust. This is episode 322, Economics. Please hit the like button as you come in. Share the video if possible. Hit that notification bell so you get all the updates from the Black Brain Trust, including those posted on the community tab. Just as an FYI, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net and look up one in your area. And if you want to get on the panel, there will be a link in the chat so you can join the panel. Once you join the panel, or once you sitting in the waiting room, raise your hand so we can acknowledge you, then we can bring you on to the panel. I'm on my new laptop right now. It's stupid fast, beyond anything I've seen before. And I'm using the headset with it. I'll probably get a new headset sometime next week or something like that. But let me know how I sound in the chat. If I sound muffled or if I sound clear, do I sound different from yesterday? Give me some feedback on my voice and the quality of it. Oh, Excalibur, it's the new HP Elite X4, I think it is. And it has 5G internet, so it's 5G ready. I just need to put the SIM card in. It just came out literally like probably I had to custom build it. So they custom built it for me, but I had to wait a month for it. So it came out in September or early September, and I just got it this week. So I just got it yesterday. All right, we're gonna get started, man. I don't see anybody in the waiting room, and you all can hear me clearly. So I doubt we'll get to our open chat tonight like I want to, but it is what it is. We can always get back to it tomorrow. I was late for this live stream because I had to do I had to go to a solidarity meeting tonight. So solidarity meeting with Palestinians. Some of the issues that they're facing is similar to what African Americans or ADOS is facing over there. So the occupying power of Israel is using the same tactics that the United States government has used against Black people here in America. In fact, it's even worse. But all the same issues that ADOS has, they're having the same issue. So they're looking for some solidarity. So I always join them to make sure that they get the best interest. And I just exchanged some business cards, and we're gonna be doing some future things over in Palestine. So keep a lookout for that. Yo, what's going on, MOT? MOT, can you hear me?
Yeah, I can hear you now.
Okay, cool. What's going on, fam?
Man. For some reason, man, I get this phone and Streamlabs never work, and I thought I was going through the same thing with Zoom, but I guess it works now.
Yeah, there was an update for Zoom probably about a week or so ago. I think it's like 4.55 or something like that. Should have corrected a lot of issues.
Oh, nice.
I don't know if you're on an Android or iPhone, but that usually,
Android.
yeah, that's usually the determining factor.
Oh, nice.
All right, let me knock this out, man, because I know we're already late. So, hmm. All right, this one is from Reuters.com. It's least lengthened. China's yuan flirts with trade war role. China, having let the yuan cross the once sacred red line of 7 per dollar, will allow its currency to fall further and may even risk U.S. anger by using it as a bargaining chip in already thorny trade talks. Market participants believe Beijing had kept the yuan on the strong side of the 7 since 2008, so effectively abandoning the trade floor on August 5th triggered intense investor activity. The currency's 3.8% decline in August as a whole was the sharpest monthly fall in 25 years, prompting U.S. President Donald Trump to launch a fresh salvo in the more than 15-month tariff war by labeling China a currency manipulator. While the central bank PBOC denies that charge, it attempts this month to smooth the yuan's weakening suggests the currency's fluctuation are not entirely unsupervised. But in contrast to past episodes of depreciation, sources within the policy circles, as well as financial analysts, do not expect Beijing to hem in the yuan in a defined range this time. It is unlikely that policymakers will impose a level on themselves, having got the psychological 7 out of the way, said Francis Chuang, Asia strategist at Westpac Banking Corporation in Singapore. It took some effort to do that while avoiding any big capital outflows and market swings. So it would be unwise to self-impose another level. What the hell? What just happened to my screen? Oh, that would be 2% lower than current levels. The onshore yuan finished Thursday's domestic trading at a 3-week low of 7.1315 per dollar and down 6.4% since June. Yuan non-deliverable forwards price it at 7.15 in 6 months and 7.19 in a year, suggesting many other market participants, while still expecting a fall, are not so confident in the PBOC's willingness to unshackle the currency. So what's happening here is China is basically degrading the dollar, the yuan against the U.S. dollar, And what this does is it forces everybody else, including the United States, to that they can't compete anywhere else. So if the yuan is even less than the Vietnam dollar or the Vietnam currency, and lower than that of the Indian currency, you really can't manufacture anywhere else because it's not cost effective. And because it's not cost effective, it's actually having a boomerang effect on the United States. So yeah, Walmart, Old Navy, Gap, whatever it is, may move their manufacturing to other countries surrounding outside of China. But if the currency is so low, it's going to cost them more to actually move the manufacturing base somewhere else. And that's really
Yep.
hurting. That's really hurting them. You got any input on this, MOT?
Yeah, well, not this year, but last year, we used to do all the stuff for Gap, Old Navy, Abercrombie and Fitch. Yeah, they're all moving their stuff to Vietnam. So is Walmart. If you look at their products now, you see that a lot of their products, especially in the checkout aisle and counter, they're all made in Vietnam now. But at the end of the day, if China could just always manipulate their currency, so that way, even if you did business over in Vietnam, it still don't matter. I mean, but that's what happens when you give away your manufacturing base without making sure you have hard things in place to make sure that stuff like that don't happen. And so when you depend on this quote unquote free market with no type of restrictions, well, that works if you're in the United States of America, but you're not going to tell China what to do, especially in a communistic system and society. And we had the upper hand over China for a long time. And we could have got control of the rare earths. We could have got control of a whole bunch of stuff. But there was a lot of capitalists who just pretty much moved all their stuff over there against the American people, and this is the result. We're gonna keep catching this L for a while, man. Nothing you can do about it.
Hey, what's going on, Nicole?
Hey, what's going on? What's going on, MOT?
What's going on, man?
What's going on? Yeah, man. Yeah, I have to agree with what MOT said. I think that's exactly what's going on. I also want to say you're getting even some more manufacturing actually happening in some other countries close to Vietnam, like Cambodia. This is happening as well. So, this is this is just something that I see going on for the future of America. We've made some mistakes. We're going to pay. We're going to pay for some of that. And, I don't know what to say, but I think things here are going to get a little tougher in certain regards. So I think we just have to really keep our eyes open, look at where we might have other opportunities to really benefit. But this is kind of a tough picture, and I think a lot of others who have been examining this closely are saying or coming down with some of the same things. MOT, would you agree?
Yeah. And guess what? Whenever that doesn't work, you got Malaysia who can make stuff now. I mean, it's
Indonesia.
It's a mess.
That's right.
I mean, so it's like every time you think you're cutting the head off a snake, like 3 or 4 just pop up. So it's like
a hydra.
So it's like at some point you're just gonna have to cut a deal, and there was no reason to have a trade war in the first place. So that way all this stuff could happen. But when you put people in uncomfortable positions, don't think that hot seat can be turned back on you at some point, and that's the short-sightedness of this predicament that we're finding ourselves in economically.
Certainly not a very smart move, but by Trump and his crew. I know they want to go against Obama and a lot of stuff that these guys are trying to do. But they, these guys are just not thinkers. You can't move emotionally from a real serious business perspective. And that's why people say, well, president, if you're a businessman, you make a great president. Well, here's a businessman, and look what he's doing with respect to that. Not very smart. So you have to look. You can't be emotional in making decisions out here, and I think that's some of what we're dealing with.
Yeah, because if you look at the ripple effect, the farmers massively affected by this. The trucking industry massively effective, and we covered a dozen articles of truckers going out of business, guys committing suicide, just all types of bad, negative effects of a trade war. And it's like, you haven't even put any soldiers on the ground yet, and you're already taking casualties in multiple areas.
Every time you go to one of these,
that's an understatement. That's an understatement. Ripple effect. That's an understatement. I'm sorry, MOT. Go ahead, brother. I'm sorry. MOT, go ahead. Is he there?
I think MOT might be driving.
Okay.
I know he's having some Zoom issues on his Android phone. So.
Okay. Yeah, but
can you hear me?
Yeah, we can hear you.
Yeah, we can hear you. Go ahead.
Right. Yeah, it's like if you go to these typical truck auction sites like Ritchie Brothers, every time, more trucks, more trailers, more than ever. Companies are going out of business. Trucking companies are going out of business because a lot of people was contingent on that container freight coming in, and all these people are going into the dry van market, and the stuff's not working. They're gone, like that trailer I showed you. Like when that accident happened, you see how that trailer looked? That was a flatbed load that they put on a dry van trailer, and you see what happened to it, right?
Wow. Sure did. You sure showed it to me. We went over that in detail. That was serious business.
And it happened like shortly before you called.
No, I called you up. You were like, I'm in an accident. I was like, what?
Yeah.
And then you sent me pictures over, and what I saw was, it was pretty remarkable.
Yeah, man. So those are the downfalls that are like hitting like major companies. And so when the major companies have their own logistics support, so now they're just getting the contracts and just turning them off onto smaller trucker companies and just keeping all the profit for themselves. So they don't even need trucks anymore for the most part. So those are the things you got going on in the trucking marketplace. So.
All right, let me get to this next article real quick. All right, this one is from Yahoo Finance. What credit score do you need to buy a house? If you're planning to get a mortgage, be prepared for your credit to come under scrutiny. Lenders use your credit score along with other details from your financial history to determine whether you will qualify for a loan. But what credit score is needed to buy a house? You'll need at least a 500 FICO credit score to qualify for a Federal Housing Administration loan, but other programs may require a 620 FICO score or higher. The credit score requirements for a mortgage can vary depending on the type of loan and lender. There are 4 common mortgage types: Federal Housing Administration loans, FHA, Veterans Affairs loans, United States Department of Agriculture loans, conventional loans. FHA, VA, and USDA loans are all government-backed mortgages. You get a loan from a approved lender and the government guarantees that loan for the bank. A conventional loan isn't associated with one of these government programs. Instead, it's a traditional mortgage product. The FHA loan credit score requirements are clear cut. In terms of the minimum score needed, an FHA loan requires a minimum FICO credit score of either 580 or 500, depending on your down payment. With VA and USDA and conventional loans, no firm minimum score is needed, but lenders generally expect FICO score of at least 620. This table highlights what credit score is typically needed to buy a house for FHA, VA, USDA, and conventional mortgage loans. Let's see if I can blow that up real quick. I'm not going to read this whole thing, but if you guys want to read this in your spare time, it probably is in your best interest if you have not already purchased a home yet. Says a good FICO score is 670 to 739. Within that range or higher, you are in a good position to get the most favorable interest rate and loan terms for a mortgage. but a good credit score doesn't necessarily make you an automatic lock for a home loan. So you guys can read this on your own. I'm not going to go into this too much. Hey, what's going on, Complex Design?
I think the key thing with houses, being that I'm in this business as well,
Mm-hmm.
I think it really does. A lot of people comes down to really down payments, man.
Mm-hmm.
You know how much money you come walking through the door with. That talks loud, real loud. Some people require 20%, but if you're coming in with a lot more than that, 30, 40% of the house down. That's why I say save your money, because you can walk in with, a certain amount of cash, depending on the area you're in or whatever, depending on the price of the house, depending on where you are in the country. But if you're coming in with 40%, 30, 40% or whatever, you're going to get a much more favorable rate, and you certainly are, are going to get a better chance at getting into that house. That's what banks like to see. I've got a friend. He's looking to buy another house. He's got a house that's paid off, and his credit score is good. He's working a decent job. And the banks are like, well, what kind of job does he have? All these, so they're all upset about the job and how much money he's looking to put down. So even he had a good score, and a house already paid for, they were still looking at this guy like a risk, because just looking at what his income is and what kind of money he's putting down. So those are big factors. So if you don't have some super high end awesome job, you got to come in with a certain amount of cash. That's why I say, get your mind right, get your money right, savings high, overhead low, keep your savings high, because that's how you walk in opportunities where you'll be able to take better advantage than others might have. This is just kind of how the banks are operating right now. And if anyone has anything opposite to say to that, let me know.
Well, have you ever heard of a bank called Carver?
Oh yeah, that's my bank, bruh. What's up?
Okay.
What's up?
Yeah. No, just asking.
Yes, sir. Yes, sir.
I think Complex Design may be having a hard time hearing us. All right, let me get to this next article. This one's from BusinessInsider.com. The 10 U.S. cities most vulnerable to a housing downturn when the next recession happens. In the midst of the United States' ongoing trade war with China, talks of a looming recession have been floating around the media. When it comes to real estate, there are several key factors that help forecast which housing markets will be most vulnerable when the next recession hits, whether it's happening now or 10 years from now. A recent analysis by Redfin looked at major metro areas across the U.S. and found the 10 that are most likely to be at risk of a housing downturn in the next recession. Recessions don't always necessarily lead to big swings in home prices, but they do in certain areas. That's why it's important to look at how much the housing market is at risk opposed to the overall economy. Redfin's chief economist Daryl Fairweather explained to Business Insider. The study measured each metro area on 4 main variables: the ratio of median home sale prices to the median household income, the ratio of the average home loan to the average home value, year-to-year home price volatility, and the number of flipped homes that have been sold twice at different prices within 12 months. These 4 variables each held the same weight and were the most weighted factors in the study. The reason why those are the most important is because they are the ones that impact housing the most. Fairweather told Business Insider. There are uh, three other less weighted variables measured in the study: the diversity of local employment, the share of the local economy that is dependent on exports, and the share of the local households headed by someone 65 or older, or by single mothers. The weight of each variable remained consistent throughout the study. You can read more on the methodology and the weight of each variable here. All right, let's go to these 10. Orlando, Florida. Number 9, San Antonio, Texas. Number 8, Los Angeles. 7 is Las Vegas. 6 is Tampa, Florida. Wow, 5 is Providence, Rhode Island. Interesting. 4 is San Diego. 3 is Miami. 2 is Phoenix. And 1 is Riverside. I'm surprised to see Providence on the map.
Why would they be that high?
I can't figure it out. I guess their local economies are shrinking. It's the only thing I can think of. According to the variables, I know Miami has it's very expensive down there for whatever reason. Well, I mean for obvious reasons, but they have a shrinking economy because hurricane disasters and stuff like that. People leaving, human capital exfilling out. They don't have a big IT sector down here. No real technology sector down here. They have a lot of sports, but that's about it. San Diego, I would have even thought would be on the map. I'm not sure what goes on in San Diego, other than the Padres. In Providence, man, I was actually going to move down there this year, man, because I found a spot down there. But they have a growing IT sector, but nothing comparable to Boston. Tampa, Tampa is Tampa. Las Vegas, I would have thought that they would have seen any sort of volatility because of all the gambling that goes on down there. I mean,
I'm surprised Reno didn't make the list because I've been to both within the past month, and yeah, man, things are starting to dry up there in all types of industries in both of those places.
Okay. I mean, Los Angeles, we know Los Angeles, at one point, Complex Design, he used to be a part of that.
Yo, what's going on, everyone?
Hey, what's up, dude?
What's up?
Not much. Chilling.
And then you got San Antonio, Texas, man.
Not sure why that's on there.
Yeah, that's weird, man. Volatility, though, is 15.7%. I guess there is a lot of home flipping down there, but, maybe with all these ICE raids, man, it's removing a lot of human capital out of their economy. So
that's shocking to hear San Antonio on the list, though.
Yeah,
that high too.
Yeah, that's something that requires a little bit more research. All right, let me get to the next article.
Hey, what's going on, Mike?
Yo, what's going on, fam?
Yeah, I wanted to touch on that previous article because I'm actively looking at real estate here in Seattle, and I actually was looking at real estate in Las Vegas. I was actually going to relocate to Las Vegas. Actually, I got my license, and then as I started looking into the real estate market, I started looking at some of the trends, and then basically the Las Vegas market, because it's the entertainment based focal point.
When you don't have a diversity in industry in a particular housing market, this is when you lead to volatility in the event of a recession. Because people will just scale back conspicuous consumption. And, you know, some of the things that have occurred in Las Vegas as far as, I want to say is that, I think it's Caesar's Palace, whatever casino group that is, raising their actual resort fees. And then, so it is becoming more and more expensive to actually vacation in Las Vegas, and they've scaled back their comps. And so there's really not a lot of compelling factors, especially since other areas have casinos like Singapore. Like, you don't have to go far anymore to go to gamble if you're from Asia. And then with all the stuff going on in Asia, a lot of the West Coast real estate speculation is slowing down. You're seeing even a stagnation in home value appreciation here in Pacific Northwest, Seattle and Vancouver included. And so and the entire West Coast, to include Los Angeles and Riverside. My cousin lives in Riverside, and I've actually went to Riverside Community College like years ago. So there's a high concentration of Asians out there, and a lot of the Asians are actually immigrants, and then students as well. So you have like a lot of students that are there, wealthy with their parents' money, and they'll just go out there and they'll just buy a house just so they can go to school and not have a place to stay while they're going to school. So a lot of them are just scaling back on that real estate speculation, and so because of that, the house price volatility is increasing, especially during the impending recession.
Mm-hmm.
I wonder if there's a tie something that ties all this together about what industry is going to get hit the hardest by having a list formulated like that. Because that list
Entertainment.
really.
Look at Orlando. Orlando is entertainment. Las Vegas, entertainment.
But San Antonio's not entertainment.
Yeah, Providence, Rhode Island.
When you have an economy that is not diverse, like let's just look at Seattle, right? You have
not diverse. Okay, got it. All right.
You have tech. You have tourism, because people like to come here for tourists. You have healthcare. You have commerce, Costco, and Amazon. So there's a lot of stuff going on out here. Now, LA has a lot of stuff going on as well, but LA, their real estate prices have been artificially propped up by rampant Asian real estate speculation. And so when they scale back, that's going to affect the real estate sector adversely. So now you don't have these prices that are artificial, because like even out here, like you'll look at a house and you'll be like, oh, this house is $600,000. You'll put your bid in, and you'll go back and forth with a couple people. You bid $605,000. Somebody bids $615,000. Somebody comes back and bids $620,000, and then you'll have somebody from China just come in and they'll just say, "Oh, well, I'll bid $700,000." Like, and just blow everybody out the water and pay way over asking price. And so that you had that happen over and over and over again.
Wow.
Also, it also factors in if a house was flipped twice within 12 months. That also is a variable.
Oh, okay. So they're gonna see the impending housing prices fall. Okay.
Yeah.
All right. Okay.
Just like LA and Riverside is high flipping area. I have a friend I went to the military with. That's exactly where he flips houses at: LA, Orange County, and Riverside.
All right, let me get to this next article from MarketWatch.com. A recession is coming. How to protect your retirement. With slowing global growth, trade wars, and inverted yield curves, it seems everywhere you look, someone is talking about a recession. Will we have one? When? Will it be mild or severe? The only question anyone can accurately answer is the first one. Yes, we will have a recession. Recessions are part of a normal economic cycles. When? No one knows for sure. Mild or severe? No one knows for sure. But most financial professionals want to sound like they know. They study data, post charts, and graphs to illustrate their view on why there will or won't be a recession and how severe it will be. It will or won't be. What does that data do for the average retiree? Not much. Maybe you subscribe to Charlie's complex. You're gonna have to mute yourself. Complex design. You're gonna have to mute yourself. Maybe you subscribe to Charlie Chart's point of view and go to cash to protect your money, or maybe you follow Gail Graff's newsletter and you decide to go to all in on a market dip, feeling confident there won't be a severe recession. Some of you will be right and some of you won't, but all are you are guessing. So is there a better way? Yes, it's called having a plan. Businesses have them to manage their cash flow, inventory, expenses, and such. And they use them to help navigate the constantly changing economic environments. Retirees and near retirees need a plan too. A plan keeps you from making quick and all too often misguided emotional decisions that may derail your retirement. The type of plan you need isn't one that tries to predict recessions. That's akin to roulette. It's either it works or it doesn't. Instead, the type of plan you need is one that acknowledges the recessions will come along during your retirement years. Rather than the constant guessing game of trying to avoid them all, you make an action plan so you know how to power right through. This sensible type of plan models out your income and expenses over varying market conditions and provides indicators on when you may need to reduce spending or adjust investments. You know ahead of time the specific actions you will take if your financial plan metrics fall below predefined threshold amounts. With a recession-proof plan, it doesn't mean the recession won't affect you. It means you know what to do when it comes along. Let's look at an example. Suppose you are 3 years out from retirement and you are 62 years old. You plan to retire at 65. You need $80,000 a year to be comfortable. You plan on delaying your Social Security to age 70, at which time you'll get about $37,000 a year from age 65 to 70. You'll need to withdraw $80,000 a year from savings and investments. After age 70, only $43,000 a year. You want to plan for a 30-year withdrawal time horizon. You could look at the 4% rule and determine that you'll need $2 million to support your $80,000 a year in your first few years. But you'll need less after that. So is the 4% rule the best way to go? Not really. Instead, you take the present value of the 30 years worth of withdrawals. If you assume your investments earn the inflation rate of 3%, you can calculate that by age 65, and you'll need $1,012,268 to support $80,000 for the first 5 years, then $43,000 for the next 25 years. For the next 25, let's assume you have the needed amount today. Next, you add up your first 7 to 8 years worth of withdrawals, which equals $486,000 and $529,000 respectively. You turn that portion of your investments into a bond ladder or use other types of safe investments with the amounts maturing each year matched up to what you need to withdraw that year. You invest the rest in stock index funds. Your allocation will be about 48% to 52% in bonds. If you're conservative, you might lean towards the 52% in bonds, which covers 8 years of withdrawals. You know that if a prolonged recession comes along, you will forego the inflation raises that you built into your plan. The good news is that during a prolonged recession, inflation is usually low. So the net impact on your lifestyle is likely to be minor. if you are more comfortable with a long-term outlook for investing, you might lean towards 48% or even less in safer investments. Maybe you want to cover only the first 5 years of withdrawals, which covers the gap to get you to maximum Social Security benefits. That would be about $400,000 collected to safe choices, allocated to safe choices, or about 40% of your portfolio. Now, if a recession or a bear market comes along, depending on the number of years you want covered, you have 5 to 8 years of safe investments in place, giving you time for economic cycle, in an economic cycle to play out. With this type of plan in place, there is no need to let the latest headlines drive an emotional reaction. I'm not going to read this whole thing because this is actually it's already over. But when I look at this and I see what it's going to cost you every single year, $43,000 to survive per year for the next 25 years. A lot of ADOS people don't have that.
A lot of people, ADOS people don't make that. Man.
That's just what's up, fellas?
What's going on, Ty City?
That's just hoping that the market is nothing crazy happens.
Mm-hmm.
You know what I'm saying? It's still a risk.
Mm-hmm.
I went over some things with my financial advisor, and he was saying, you know, start looking into different stable funds. But man, I feel like he pretty much talked me out of getting into hard assets, because that's what I really want to do. I got money in my 401k, but I don't want to play with the markets. You know what I'm saying? I'd rather get into some hard assets. You know, I own
A hard
rental
asset.
property already.
A hard asset is what a 240 Z, all shiny now.
Oh yeah, nah. Yeah. I mean, I don't know. I don't think hobbies is recession proof though. You know what I'm saying?
Well, here's the thing for me, and we are not certified financial plan professionals. If you want to certify financial planner, please look up cfp.net. Look up one in your zip code. We don't give out financial advice here. Here's how I look at it. There's no way, even for what I make, there's no way you're gonna survive off of $37,000 a year, much less a negative
Well, see,
account. Let me finish, Ty. There's no way you're gonna survive off of that kind of money, even as a working class person, because you have too many other investments and things like that that need to be tended to. Especially you have kids, man. You got kids, you got to pay for their schooling and all that stuff. Then child support comes in and takes what they want. Me, I'm taking 100,000 and I'm dropping it right into some part of Latin America or on the continent, and I'm retiring over there where I can live off of, $100 a day, $200 a day. I don't need, 40, 50 grand a year. That's crazy. I mean, you can retire off of that on the continent or in Latin America. You can go to Guatemala, you can go to Belize, you can go to Honduras, and still live like a king down there. I just don't understand why anybody would want to stay here in hemorrhage.
I got a solution
I'll
to
tell you this
that.
right now. You go to Fortaleza in Brazil, all right, which is a beautiful, beautiful city up north. You're an American making 50 grand a year, and you're looking at the exchange rate right now about 4.16 to $1. All right, you are coming off. You're coming off.
Oh, yep. But
you're coming off. 50 grand.
But we talking about a dollar that's losing 3%, 2 to 3% every year. Now, I'm 32. By the time I hit retirement age, if the dollar is still around or even relevant at that time, right?
Mm-hmm.
It's just gonna be powerless. You know what I'm saying? And they kind of put it in their article about inflation. It was when you read it, the wording was there, but it wasn't punctual.
Yeah, this is crazy. This is just crazy. And the reason why I put this article on the docket is because a lot of ADOS people don't have this. You don't even have this. A 401, not a 401k, IRA account. That's unheard of. The last articles we read, the last few weeks, black people moving from house to house, with multiple evictions on their records, and no access to living in food deserts and stuff like that. The last thing they're thinking about is retirement. And some of these people are close to retirement. They're close to 59.
On that, on the previous article where you was talking about the housing market, I'm in the middle of actually leaving my big house. I'm gonna rent my big house and go into my smaller house. I'm making the adjustments right now to get ready for what's coming. You know what I'm saying?
Mm-hmm.
And I'm actually looking at a multi-family duplex, and I was about to close on it, and my lender straight up told me to not go through with it. And I'm sitting here watching that duplex just sit on the market right now, and they just dropping the price $3,000 every few weeks. It's just going down, and my lender was just telling me, just hold on, just wait.
Mm-hmm.
Hey, Thai City. Good evening, everybody. I said,
Hey, what's going on, fam?
what's going on? Hey, you mentioned something, Thai City, about the dollar. The dollar. There are two strong currencies in the market today. One is the dollar. The dollar is king right now.
And the Swiss franc.
Even if it drops down below some of its competitors on the market, the U.S. is still a strong country. When I say strong, I mean it's economically is still strong. Living in the U.S.
DE is dead on it. He's dead on it.
Living in the U.S. Living in the U.S. is going to be a problem for those who use the dollar. If you have, say, the British pound, if the British come out of Brexit and they come out, even if they come out with, they go for broke and they come out with the Commonwealth partially intact, the British pound is going to rise. So if you're if you come to America with British pounds, you're going to survive. The other people who are going to survive is say the Chinese, the renminbi. The Brazilians might survive. It depends on if somebody comes in power that has some sense down there. But the dollar will still be a currency to contend with because because of the way the U.S. economy is built. Unless these idiots destroy it, I mean literally destroy it. If they go into another couple of wars, then you're gonna see the problem.
Yeah, I feel you, but I'm talking like I got 30 years out.
Yes, 30 years down the road. I'm talking about 30 years down the road too.
Yeah.
Because the way the world power shift, it doesn't look at the British. The British really don't have an empire, but the British pound is still one of the world's strongest currencies. It's going down, yes.
Top 20.
But
top
it's
10.
still one of the world's strongest currencies. And the British has not had empire for how long? More than 30 years. So you have to look at
since World War II, really, that's when
exactly. So you got to look at this historical thing. If the world goes into war, total war, then you got a problem.
Well, first of all, DE is hitting it right over. He's hitting it dead on the head. Unless there's some unforeseeable super war, which could happen, which could happen. So we can't say that can't happen, but that could happen. We could see some great changes. But as of right now, what we can see for the foreseeable future, there is tremendous investment in the dollar. Even though it fluctuates, it moves up, it moves down. People are still, with their currency, they're buying dollars. They're still doing that.
And that's what my guy was telling me to move my things out of the 401k into a stable fund, which is pretty much back with bonds and whatnot.
That's what you got to do. You have to move your.
I just want to say this.
You're trying to preserve your as much of your money as possible. Suppose you got $500,000 in the 401k. Don't put
I don't want to bank on the markets.
Hold on a second, D. There are a lot of strategies you can use because you can put money in gold, you can put money in precious metal. There are a lot of things you can do. You're gonna have to watch the market. You're gonna have to watch. You're gonna have to study. But the dollar right now is strong. You can look at a lot of countries. All right, got some friends in Brazil right now and all that right now, and it's 4.16, almost 420 to the dollar right now, and you can buy a steak dinner, man, for $5, man, and all this kind of stuff. I mean, $5 American, whatever that, and you're living great. So there's a lot going on around the world right now where the dollar is strong now. Like I said, Mike did say, we're not investment advisors, even though I did carry a Series 7 license and so forth. I did have a securities license. I was definitely able to give that kind of advice. But as of right now, that's not what we do here. But at this stage of the game, you got to really watch the market. You got to watch things very closely. But you have to look at where you can arbitrage your money, okay, where you can actually do that. And there are a lot of opportunities around the globe if you want to play that game to really do very, very, very well. DE hit it on the head. I have to say I have to totally agree with him as far as that's concerned. But as far as us giving real hardcore super advice as to exactly how to really handle that, you're definitely going to have to study that and work with your investment advisor to really get a very good idea on that. But I'll say this: I do think you're very much. What you just said, you're kind of moving in the right direction. I'll definitely say that.
Well, Ty City brought up a point. He said he's 30 years out. Guess what? ADOS doesn't have 30 years, bro. 2050.
Well, look, a lot of ADOS, a lot of black men who have the capacity. I don't know. I sent you guys out a video today about this guy who lives in America. You take a look at it. Anyway, people like him, he's educated, he has a pretty good job, he moves around the world. There are a lot of black men who are in that income bracket. There are a lot of black men who are in the 80 to 100,000, 200,000 $1 million bracket. But what happens is that how would I put it? They are kept out of the black market. The people who the world look at, who we see and say ADOS. They because of the world that they live in. Say they're investment people. They work for some investment company, and these guys make $1 million a year. They are not in the black community. When they buy a house outside the black community. When they shop outside the black community. But they are still ADOS.
Yeah, they're outside of the ecosystem.
Yes. So there's still a lot of black men who are out there, but the black community have to pull them back in. And when I say the black community, it has to be, we have to kind of like give these guys a leadership role, a place of leadership, and that's where the problem is in the black community, because the women run things, and the women don't want to accept these men.
It doesn't help
as leadership,
right? It doesn't help that's the social perspective that they have, right? The sort of normalcy of educated lanes are the ones who are causing all these problems in the market and in the community itself. I find that to be a very dubious statement by some of these content creators, who have not done their research on this.
But we are causing problems. But we are causing problems because we're not playing along with their game plan of coming back and rescuing things for scant returns.
Exactly.
So in that aspect, we are.
Go ahead, Super Triz.
But see, even if we come back, we're not rescuing, because see, I'm a prime example of what DE Raptor is talking about. Now, I'm not making $1 million a year, obviously, but I do quite well, especially since I finished school and like I'm actually like working. I'm being productive. Like I'm working like 5 days a week. Like I was only working 3 days a week like for several years. You know, so now I'm actually working at least, you know, between 4 and 5 days a week, man. I'm making more money than I've ever seen in my life, you know. And so now I'm actually looking at properties that I never thought. I'm looking at a 5-unit property right now, and you know, it's outside of the black. Obviously, I'm in Seattle, so I'm already outside of the black community. But like this property that I'm looking at is nowhere near anybody black. And you know, and then of course, if I'm living there, then you know, my transactions are going to be with non-ADOS individuals. Even the scarce black people that I see are actually East African. And so I think, like, you know, as far as you know, my investment strategy is, I'm looking at things that generate passive income, because when you're talking about stock market,
take advantage of that opportunity. You talking real deal shit right there.
Yeah, because we talk
that shit. Talk that shit, because that's exactly what you got to do.
And the reason why I'm looking this way is because when you talk about stock markets and bonds and things like that, you're basically relinquishing control over your assets. You know, you're letting other companies manage the assets, and you're letting the actual market manage the assets. But when you're talking about like real estate, and I'm talking about in particular multifamily revenue generating real estate
dwellings, you're hitting it right in the head. Talk.
Yeah,
go ahead.
Because I want that cash flow. And so like right now I'm looking at a property that will potentially, not, you know, cap rates are very low in Seattle because property values are so high. But I'm looking at a property that will potentially cash flow with some light renovations right now. I don't have to wait till the property is paid off. I have to build up a significant amount of equity. So like Thai City, you're talking about that duplex. Now, see, the thing about a duplex is depending on where, I don't know what area that you're in, but a lot of times duplexes don't cash flow when you actually calculate the expenses. They don't cash flow until the actual property is paid off, or you have a significant amount of equity and you're able to refinance. But like a multi-family, like you're talking about 4 units on up, you know, a lot of times those cash flow even with little equity in the property. So that's something to think about as well. Then once the property is paid off, you're talking about like a 30-year plan, your property will be paid off in 30 years. That property, I don't care what kind of property it is, even if it's a duplex, but definitely a multi-family, like as far as 4-plex, 5-plexes and things like that, will cash flow. And so then that concern about, well, how much money do I have in my 401k, and at 4%, you know, how much money can I spend annually? You're talking a different language, because that cash flow actually will appreciate every year, because as rents values rise, you know, as opposed to your investment strategy where you're actually having to scale back your expenditure each year as inflation increases, you're actually doing the opposite. Your actual rental income, you're actually increasing rents on an annual basis. Now you're making more money cash flowing from your property every year. So I think, you know, as I'm not an investment advisor or anything like that.
It's a hedge against inflation. Very good.
Yeah,
he's talking right. You understand the bottom line, fam.
I feel you, bro. I did my homework. It's right next to a college, UNT, and it's already written on both sides, and it's gonna flow 1,000 out of it right now a month.
That's beautiful, because when you're near college, you're always gonna have kids coming in, you know, looking to rent an apartment or run a place or whatever. It's always gonna be always gonna be something that you're gonna have. As long as it's in good and very in good condition, it's always gonna be somebody looking to rent.
And tied to slumlord.
You already know. I told you I got 3 properties that I pay like vacant properties in the hood that I pay taxes on every year.
Well, what you can do is you can get that that custom Bugatti that dude built. Then you can rent that out to the tenants.
I'm telling you, man.
Let me jump to this article real quick, man.
I see Brother Black Ram is in the chat. Brother Black Ram, what's up? You mentioned him up, right?
Yeah,
Mike?
I mentioned him up.
Yeah, welcome, bro.
Yeah, welcome, Black Ram. And I gotta say that American Thought series, oh man, that's classic. And he has this classic stuff he's dropping. So
yeah, the link is in the chat. If he wants to get on, he's welcome to get on. Same thing for Paperboy.
Hopefully he does, and talk about his money here. All right,
let me get to this next article. We're way behind. All right, this one is from CNBC.com. Bernie Sanders wants to replace private credit reporting firms with free public registry. There could be a new factor to your credit score, the President of the United States. Independent candidate Bernie Sanders wants to eliminate the private credit reporting companies and substitute them with a government-managed credit registry. The proposal was released over the weekend, and at the same time, Sanders announced his plan to erase $81 billion in past due medical debt. One of the main issues dogging Americans' credit reports today. Senator Sanders says the public credit registry would be housed in the Consumer Financial Protection Bureau. The agency created in 2011 to protect Americans from predatory lenders in the wake of the financial crisis. According to Sanders' campaign, the new system would use a transparent algorithm to determine credit worthiness that eliminates racial biases in credit scores and allows Americans to access their credit scores for free. Medical debts would be excluded from people's reports. We must and we will remove the profit motive from assessing credit worthiness of American consumers. There are three major private credit reporting companies: Equifax, Experian, and TransUnion. These companies collect data on people's borrowing patterns, including their payment histories and any potential bankruptcies or tax liens. Critics of the current system point to the Nagon, you're gonna have to mute yourself, bro.
I'm not making any sounds. I don't get nothing come through the back. I'll mute myself anyway, but I got nothing going on.
Critics of the current system point to how Equifax's insufficient data security practices allowed it to suffer a massive hack in 2017 that led to more than 140 million Americans having their personal information exposed and to studies that show people's credit reports, which can determine if they are hired for a job or how much they'll pay for a car, are riddled with errors. Credit reporting companies don't have a financial incentive to improve accuracy, said Amy Traub, Associate Director of Policy and Research at the liberal learning policy group Demos, which has advocated for a public credit registry. Sanders' version, she said, would serve consumers as its central mission and would have a mandate to invest in accurate data. Our current credit reporting system also intensifies racial inequality, Traub said. For example, credit reports track the time it takes a borrower to repay a loan, but Traub said how long it takes to pay back a loan is based on a large extent on access to family wealth, which is a result of generations of discrimination in employment, lending, education, and housing that produce a huge racial wealth gap. The median family wealth for white people is $171,000 compared to $17,600 for Black people. Half of white people say they are very confident they be approved for credit, while just 20% of Black Americans feel the same. Meanwhile, around 7% of white people with poor credit scores say there are errors on their report, compared with 40% of African Americans. Credit reporting on a public registry could reduce racial biases by drawing on new data sources, such as income, and excluding others like late payments on predatory loans, which are disproportionately relied upon by people of color, Traub said. Although he wouldn't advocate for removing medical debt entirely from credit scores, credit expert Ted Rossman said it makes sense to shrink the role it plays. That's because the health insurance system is complex and it can take a while to get reimbursed for doctor bills. Overall, Rossman said he's not in favor of abandoning the current credit reporting system. I believe competition and the free market are good things, he said. Yeah, right. Advocates for a public credit registry say it will finally bring transparency to credit scores. Credit reporting companies never reveal exactly how scores are created. The algorithm is a black box. Under a public registry, she said, the algorithms used to determine credit worthiness will be publicly available with clear explanations of what consumers can do to improve their credit. Traub said Trau estimates it could take 7 years to transition from a private credit reporting system to a public one, but that the effort would be well worth it. I think there's tremendous frustration in the country with a credit reporting system that is downright hostile towards to consumers. So this is interesting, man, because I think they made some great points about the historic injustices in terms of ADOS buying houses, ADOS receiving credit, unfair treatment in housing practices and things of that nature, redlining, discrimination. I think they may have a point. I can't say I disagree with this at all.
Financial illiteracy.
Well, even when you are financially literate, the system was set up. The system was rigged from the get-go. So even if you were financially literate, you were screwed.
That's exactly correct, and that's the game that they've had. This goes right in line with redlining and everything else.
Mm-hmm.
Goes in line also with certain kind of federal housing loans that we were not able to get. That left you to the predatory lending practices of some of these other rapacious institutions that gave you these loans, tore you out the frame, and then took your house back. Mm-hmm. And sold it again to others. So and then of course you couldn't get a fairly back loan to back up your property like the white folks did to keep you in not only in your home but also keep you federally backed and safe. So you didn't have any of those nets. So yeah, that's actually correct. That was set up by your government in so many ways that people don't want to sit back and look at. And this is when we talk about reconstruction and we talk about reparations, these kind of things, this is what I'm talking about. More so than just grabbing a check, but looking at what these people have done to keep you from actually accumulating wealth here in this country. It was a total setup game. Mike's dead on it. It's exactly how this thing has been set.
Oh no! In my opinion, it doesn't matter who's running this system. It will always fail black people because the way the system is set up. You guys just pointed out all the injustices that is set up in the system already. They don't change that. They don't change those injustices.
We can fix it.
But it's not going to be fixed.
Yeah, we can if you push hard enough. See, we were making those types of moves, and we didn't keep pushing. We have to consistently push this, and we have to have our own black fund and our own black funding agencies to really help us to do this. That's why your black banking system and these institutions have to be strengthened. Okay, and I'm not talking about black banks that are owned by white banks. Real institutions that we have to consistently invest in and develop. That's
a good point, Nagon, because ADOS needs their own public bank. In the same way that the public bank of North Dakota operates. That's
from Mike. You're moving right in on the idea I was talking about. But that the beautiful follow up. That's exactly what I was talking about. Go ahead.
Yeah. So a credit reporting mechanism being managed by the government would actually alleviate a lot of these problems. And if you wanted to do it from a technological standpoint, you could easily use blockchain to get that done. So if you had a public bank in predominantly black neighborhoods, what that would do is it would allow them to have access to credit with fair and just, and it would give them the democracy they need because they put their money in there. They get to vote on it. Once you put your money in the Bank of America or any of these other institutions, private institutions, you don't have any say in what goes on with that. So they could just take your money at any given point. Go ahead, MOT.
No. You hit it right ahead, and then you could also put pressure on the government to federally back those loans as well.
Right, because it's FHA.
That's exactly correct, and that's the difference. That's the difference that you have. So you got to understand how this thing works, and we can definitely do that.
Go ahead, MOT.
Go ahead, MOT. Go ahead. Do you think?
Yeah, it's just that by having something like this, there's, especially with banks like Fifth Third and Wells Fargo, and how they were still giving people subprime mortgages and all that kind of stuff. With the actual fair system of how you can actually correct your report and get the highest type of number for your actual credit score that's made by the government. So that way you can change the laws so that way you can actually see stuff rather than just it is what it is. Rather than you get the chance to change things, so that way you have like a one-to-one comparison on what will affect my credit and what won't. I think it's a good idea personally. I don't know how on earth that we even let it's especially with experience. Oh, you could pay this amount of dollars to get like a free boost. Like, kid, what are we doing?
Yeah.
What are we doing?
And they don't tell you about how the algorithm works. It just works, and you're not supposed to know.
Yeah, crazy.
Yeah.
Well,
Let me
Mike, what
Go ahead, bro.
what do you think would be a good way of vetting somebody for a loan?
You look at their work history. You look at the size of the loan itself. A loan that's within their salary range makes a lot of sense. A loan
So
that's outside
disposable
their
income.
right. I mean, if a person is looking at a $10,000 loan or less, that's actually doable. But the problem is a lot of those times, most Black people are denied these sort of financial vehicles. So what I'm saying here is how you would determine outside of the proprietary algorithm that's already in place. You use their base income and you use their assets. Maybe their grandmother or grandfather might have got in the market during the boomer days, during the Bretton Woods era, and you would have that asset is probably worth $500,000 now. They're probably good for it. Why not go with the loan? But see, what has happened in the past is that they've just been denied just flat out because of their the area that they live in, the zip code.
So you that's more collateral based, then, right?
That's how most countries operate. Most countries operate that way.
Okay.
Anytime you allow capitalism to rise above your federal institutions, man, it's already game over.
Which is where we are right now, because if people can actually vote on the fact that their jobs are going overseas, so a bunch of people can be billionaires, I guarantee you people would have voted for them jobs to stay here, pretty much.
Well, see, because I can't remember which candidate running right now, but they were saying that they would like to use phone bills and just utility bills and things of that nature as a form of credit history.
I don't think that's a good way to measure it because and I'm saying specifically for ADOS because there's a lot of single mothers out here. There's a lot of single mothers out here who have used their sons or their daughter's name to open up Comcast and Verizon accounts and then never paid them and let that shit go into delinquency. Now they got a bad credit score when they're older.
I agree with what you're saying about Black people need to get their own financial institution set up, but I ain't trying to sound crazy or nothing, but my credit was way messed up and I fixed it fairly easy with the traditional system that's in place right now.
Oh, you mean paying shit off? Okay.
Nah, disputing and fighting.
Nice.
Wait,
Well, I get you, man.
Wait a second. Ghana Den? It's not wrenched up?
What?
Yeah, gotta make sure that's taken care of before we
wrench up Ghana Dan, man.
I didn't even know that. I just saw him post and I was like, what the hell is going on? All right, let me get to this next article. All right, this one is from businessinsider.com. Recession scared or scarred. Millennials are opting for buy now, pay later shopping. It's been 10 years since the recession, but millennial spending habits haven't exactly recovered, according to a 29-year-old Australian entrepreneur, Nick Molnar. Molnar is the co-founder and CEO of one of Australia's fastest-growing fintech companies, which launched in the US in 2018 and is offering payment solutions for recession-scarred, credit-fearing millennials. During the 2008 financial crisis, I had just turned 18, and the message that went around society was, "Don't spend money you don't have." He told people, "You're gonna have to mute your mic if you're not talking." The millennial generation started spending money differently from any previous generation because of that life defining moment at the time that they became an adult. It meant that they preferred to spend their money because they didn't want to engage in credit and interest bearing loans. Because of this, Moner was inspired to set up Afterpay, a buy now, pay later service that partners with retailers to let consumers to spread their purchases across a series of payments. If you're buying $100 pair of jeans, for example, you'd be able to split the payment up into $25 portions paid every 2 weeks. Come on, man, this is ridiculous. There's no fee for the consumer to use the service, and Afterpay makes most of its money from the retailer, which spends between 4% and 6% of each transaction, with the hope that customers will become more loyal using this service and be encouraged to spend more if they don't need to pay a lump sum in one go.
$100 is a lump sum.
The company has grown at a rapid rate since it launched in 2014 and has since spread to London and the US, where it has signed on more than 6,500 retailers in the past 15 months, including the Urban Outfitters Group, Levi's, Kylie Cosmetics, and Revolve, among others. It now has more than 2.1 million customers in the US and counts Klarna, Quadpay, Sezzle, and Affirm as its main competitors. But as awareness has grown, the company has drawn criticism from people who say that service isn't any better than a traditional credit card, as it encouraged young shoppers to spend more than they have. The buy now, pay later mantra is intriguing, as smaller payments are seemingly more affordable, but this tool can get many shoppers into trouble. She continued, those who don't manage the number of purchases they make using Afterpay are likely to miscalculate their budget and what they can actually afford. Those that overspend and find themselves in a position of not being able to pay within 10 days of the payment due date are then subjected to a late payment fee of $8. In 2018, Afterpay drew scrutiny for these late fees after its year-end report in June 2018 revealed that nearly a quarter of its revenue stemmed from this. Since then, it has implemented a late fee cap, 25% of the order value, and this portion of its revenue dropped to 18.7%. My thing here is that, why are you spending $100 on a pair of jeans? Like, really? Is it really that serious? Ty City, what is it about True Religions that you like so much that you just gotta spend that $100?
I ain't even gonna say that, man.
Oh yeah, see, he's guilty.
Nah, man, Kevin Samuels be gassing my head up, man. Be thinking I can go and buy that shit, man.
Oh shit! So it's Kevin Samuels' fault now.
They had a $1,000 pair of shoes, man. I almost unsubscribed, man.
But the thing about it is that I'm sure Ty City can afford $100 jeans, probably can afford a $1,000 pair of shoes, but the people that can afford that type of stuff generally don't buy it. Nah. We're better stewards of our financial resources. So I think this is more targeted at people that that obviously mismanage funds. Like, and I can see a use for something like this. Say for instance, you're in school and you're trying to work and like funds are tight, and maybe like you need like the opportunity can be you got to go to a job interview. Okay, I got to buy a nice suit or a decent suit and some shoes. I don't have the money right now, but let me do that because now it's going to present an opportunity for me. Or other than that, I really don't see much logical use for something like this. It's just bad all around. Like, overextending yourself financially never has made any sense to me. The only time I can see it making sense is like if you're, say for instance,
you're trying to leverage like some type of financial deal, that's going to actually generate revenue. But in most cases, a deal like that, you're not going to be using some type of credit card that has a buy now pay later feature on it. You're going to be looking at some other type of financial resources to fund that endeavor.
Yeah, but
Well,
they already have an app set up to where you could pretty much withdraw from your upcoming check.
Earning app.
Yep.
Yeah.
that's crazy. That's just nuts, man.
But the marketing for this stuff is so genius. Like I get this stuff on my Instagram feed all the time, and I know people is buying. Like I look on the Earning app, ads or whatever, and you can comment on them, and I see people commenting on them like, oh, I can't wait to download, and they're sharing it with their friends.
Mm-hmm.
Like you can see them at other people, so that way they can know about the Earning app. So like stuff like that is, honestly, I'm at the point now. I don't know, maybe MOT may want to chime in on this. I think where we got to, number one, stop. Everybody is not part of our community, and so if I have an opportunity to invest in the Earning app at the detriment of certain people that I don't really consider my community because they don't even think like me, just because they look like me don't mean they are with me. I'm all for it, to be perfectly honest. Now, personally, I wouldn't use it, but if I had an opportunity to invest in, say, for instance, an Earning app, I would damn sure jump on top of it.
Yeah, well, I do it all the time. Yeah, it's not a bad deal.
Hey, but you know what?
As an investor,
Go ahead, bro.
Go ahead, DE.
as an investment, this is a great idea. But there's something that you guys, you know it, but you're not saying it. The millennial generation, they're not making as much as their parents did.
Right.
They've got a bunch of school debt.
Mm-hmm.
The jobs are not there. They're working in jobs that pay less. And they have to live. They're living with a lot of them are living with their parents, my sons.
Mm-hmm.
And the money that they have to spend, is such that they really cannot keep this economy going. So what you have here is somebody came up with a good idea for people who can't, like the people who can't get credit cards that go to payday loans, people who can't get credit cards that go to buy debit cards that charge them for every time that they go to Walmart to buy $1 or something, they get charged $2 for spending $1.
Mm-hmm.
This is the kind of deal that these millennials are getting into, and they don't realize it yet because their bills have not come to fruition like the generation before them, whose bills are now coming to fruition, that their parents can't get married because of the school bills that they have. They have $200,000, $100,000 in school debt. They can't get married. They can't buy a house. They can't support their younger generation. These people, the millennials, are getting into the debt trap that their parents already got into in a different manner, and they're finding ways to get them involved in that debt trap. This is one of the ways that
the overhead they're dealing with right now is ridiculous. You say just with the whole school loan piece, it's really crazy, and that's why they are hitting them with these different areas, with these different, I'd say these different gimmicks to really get them to pay. That's why I say it's so important that these millennials, if they do have a parent or somebody like myself, a dad, or somebody out here who's got a house where you can kind of hang in and save money for a couple of years, that's how you have to work it. Because I mean, literally, you're coming out of school. I'm talking about coming out of a state school, State University in New York, let's say, at New Paltz. 4 years out of there, State University, you're 80 grand in debt. This is State University. So when I'm talking about private universities, that you're coming out where you may be coming out 140,000 or so. So it's a lot. The overhead that they're being hit with just coming out is harsh. The millennials who, quite frankly, are doing better are those who have not gone to college or who have actually gotten certain kind of certificates in certain types of areas, HVAC and so forth, and some of these other professions where you don't have to have a 4-year degree, and they're the ones who seem to be jumping out here making more money a lot faster. That's how it seems. And a lot of these, we've seen a lot of white male millennials actually doing that more so than what we're doing. They're not going to college as much. Black men are going to college more than white men right now, but they're making
in
money.
2 years. Yeah, in 2-year schools, there are more black men in college than white males.
Than white males. But white males, they're jumping into these, they're doing the CDLs. They're getting involved, in HVAC. They get involved in these plumbing and electrician programs and so
Civil
forth.
engineering.
It's exactly. They're getting involved in that, and they're making money quick. They're jumping. So just want to say that. So I think so much of this also is how we focus our young on as to where to go. What's the quickest path to a career and making a living, so you can have a family or buy a home or anything else like that. I know in my neighborhood right now, it's funny. I look around. There are no young owners. There are no young owners. There are none. No white or black. There are no young owners
because they can't afford it.
They can't afford it. They can't afford it.
And so they're already in debt. By the time they get out of school,
that's what I'm saying.
So much debt that they can't afford it. And then they can't go to their parents because their parents are already in debt. These people, and what the stores are doing is the stores, in order to keep themselves from going out of business, in order to keep themselves from going out of business, the stores are getting together into programs like this to get these people to go into debt. Long-term debt. You going into long-term debt for $100. Can you imagine that? People when car loans start going to 7 years.
Okay, D. This is what I was gonna say. It's like, we see exactly how this whole scam game is going. We see how people are being spun around. That's why it's very important. Once again, as I said, that we got to focus. Young people. That's why we're let's say a channel like this and others can really focus people on where to really focus where the real good jobs are and to get out of these types of scams that are just going to keep you underwater consistently. You're never going to get ahead on this on this kind of stuff. You never are
buying $100 jeans. I can tell you that much.
Not buying $100 jeans or I was talking to my grandson. We were talking about sneakers and I said, yeah, I see these new Jordans. Smart kid. He's like, nah, Grandpa, I don't really want those. I don't really want those Jordans. They're too expensive. I don't really. I'm like, kid, you thinking right? They have you out here buying these new Jordans and these new ones and all this kind of stuff like that for $200. Who the hell is buying this shit for $200?
Dude, I've never owned a pair of Jordans a day in my life. Never.
I mean, who's buying these sneakers for $200?
Man, come on, Mike.
What is this?
The select men.
Oh, come on, Mike.
MOT's an asshole.
Come on, Mike.
Never. I own New Balance. That's what I own. I have some Chuck Taylors, white, and I have some Chuck Taylor black ones, and that's it. That's all I got.
Hey Mike, if you're a 10-year-old, you and your mother go to the store, and you see this pair of Jordans, and the store manager's come in and say, "Look, we'll give you these Jordans to take home today. It costs $200. You just pay $10 a month. You'll be paying for two years for your son to have this pair of Jordans. So and if you don't pay off the debt with the interest and you miss the payment and they add on another $8 or $10 or whatever the case might be, you'll be paying for this thing for 4 or 5 years.
And the thing
That's
is,
the problem you have.
His big ass feet are gonna grow right out of him by next year, anyways. He'll grow to a size 12. It's ridiculous.
So next year,
man.
guess what? She's going to go buy another pair because it only costs $10 a month.
And these kids got bunions nowadays. They're gonna bust right out of them damn Jordans, man. It ain't even worth nothing at that point.
This is a genius idea. I'm serious. It's a genius idea if you're an investor.
Well, if you're a guy like Ty City running around with Louis Vuitton belts and True Religion jeans and
I mean that's funny, but that's funny, but people are doing this stuff. conspicuous
See?
consumption on this stuff. Crazy.
See?
And some of the richest people I know are walking around wearing tattered underwear and freaking tattered underwear and thrift store coats, walking around just looking bummy as fuck, but damn, they got $1 billion in the bank. It's crazy.
Look,
Now,
Ray,
while y'all playing around, I go to a pawn shop and I'll be buying silver out of pawn shops, and they got shoes on the wall where people be pawning the shoes now.
Come on, man. Pawning shoes?
I can believe it. I can believe it.
Hey, let me tell you guys something. This Goodwill store here in Titusville, in Cocoa. If you go into the Goodwill store here, I can guarantee you the parking lot is full, and there are about 15 Mercedes Benz in there.
Yeah.
You hear what I'm telling you? Anytime I go to that store, I like go by there because they carry fishing rods and electronics that people just throw there and you can get it cheap.
Mm-hmm.
But I go to that store and I'm seeing all the Mercedes parked inside it. These people are going inside the store to buy this stuff, and they're driving Mercedes.
Oh yeah, that's how it works, man. I'm in the tech community, from an IT perspective, and I see the way how some of these millennials rock, man. The non-black ones, man, they rock these beat up Converse, same Levi's jeans, and a Bazooka Joe T-shirt or something like that, some kind of comic T-shirt, and they'll rock that every day.
They'll rock it every day. They'll live in a house with 7 or 8 roommates, and they'll sit there and they'll stack that way, and then pay short money. I see what a lot of these guys are doing, and especially if they decide to move into another city and not live with their parents, you know, and that's just how you have to do it if you're gonna stack your bread, and you can stack some money in a decent period of time. If you are how would I say disciplined, but you have so much out here trying to separate you from that money, and that's what's hard. That's what's hard. Some millennials making the transition. I see others who are stumbling hard. Anyway, go.
Let me knock out this article real quick. This one is from the WallStreetJournal.com. Please mute yourself if you're not speaking. Millennials continue to leave big cities. Large U.S. cities lost tens of thousands of millennial and younger Gen X residents last year, according to census figures released Thursday that offer fresh signs of cooling urban growth. Cities with more than 500,000 people collectively lost almost 27,000 residents aged 25 to 39 in 2018, according to a Wall Street Journal analysis on the figures. It was the 4th consecutive year that big cities saw this population of young adults shrink. New York, Chicago, Houston, San Francisco, Las Vegas, Washington, and Portland, Oregon were among those that lost huge numbers of residents in this age group. The drop in young urban residents last year was smaller than in 2017, when big cities lost nearly 54,000 residents in this age group. But the sustained declines signal a sharp reversal from the beginning of the decade, when young adults flooded into the cities and helped lead an urban revival. The 2018 drop was driven by a fall in the number of urban residents between 35 and 39 years old, while the number of adults younger than that rose in big cities. Those gains have tapered off in recent years. Separate census figures show the majority of people in these age groups who leave cities move to nearby suburbs or the suburbs of other metro areas. City officials say that high housing costs and poor schools are main reasons that people are leaving. Although millennials, the cohort born between 1981 and 1996, are marrying and having children at lower rates than previous generations. Those who do are following in their footsteps and often settling down in suburbs. They might prefer to stay in the city for lifestyle reasons, but might end up leaving because of the quality of the public goods, said Catherine Levine Einstein, an assistant professor of political science at Boston University. Professor Einstein helped lead a 2017 study of U.S. mayors that found that only 13% said the housing stock fit the needs of their constituents very well or extremely well. It's a sentiment that was true in rich and poor cities alike. They see a really serious mismatch between what their city's current housing stock is and what their residents need, she said. New York lost almost 38,000 people aged 25 to 39 last year, a decline that was roughly twice the size that it experienced each of the previous 3 years. That drop coincided with the city's first overall population decline in more than a decade in 2018. Among the big cities that gained a large number of young adults were Los Angeles, Phoenix, San Antonio, San Diego, Austin, Seattle, Denver, and Columbus. What is it with San Diego and San Antonio, man?
Cheap, a lot of industry there, a lot of jobs, cheaper housing as compared to New York. People are, New York, a lot of jobs. You can make money, but it's too expensive. So people are going.
We don't have a state tax here in Texas.
But it's cheaper, man. It's also cheaper. San Antonio, you take a look at what the average apartment cost is for a 1-bedroom and match that with, let's say, an apartment in the Bronx or, God forbid, somewhere in Midtown Manhattan. Oh my goodness gracious! You're talking about 2 separate universes.
Well, yeah, a lot of those tech firms came out of California to go to Austin, and just relocating from there to Texas was a 30% raise off taxes. It's like having a 30% raise.
Yeah. I mean, it's big. So that's what you got. Industry moving in there, and the cost. Like I said, New York City, a lot of work, but man, I mean, it's you have a lot of work here, but it's expensive. It's expensive. $90,000 a year. When you're trying to raise a family, in New York City, it's you're pinching your pennies. You're pinching your pennies, man. You are pinching your pennies. It is what it is. And then, so I say 90,000. Let's say that's 2 incomes from a husband and wife, and both are working. Let's just say and you starting out regular jobs or whatever. It's a lot. It's a lot. It's a lot. And when I talk about even Midtown Manhattan, we're talking about the Bronx, some of the outlying boroughs. And then we start getting into the suburbs. You start getting into certain areas, Tony areas. It's just as bad. So it's New York, especially in the metro area, difficult, very expensive. So people should leave, and it makes sense why they leave, or at least get outside of the metro area, at least a good 60, 70 miles outside of it. Then it gets a lot more reasonable.
I know in Boston they had this discussion a couple of years ago, back in 2017, where they were starting to show these tiny houses on display, and people were really down for them, because the problem is they built up all these public housings for big families, but there are, like the article says, millennials aren't having kids like that anymore. They're not even getting married, so they're kind of cohabitating, but that's the extent of it. But they're not having 5 and 6 kids. They're lucky if they even have one.
You know what, man? I lived in the downtown area of Dallas, in the Deep Ellum area, and it's so overrated. The last year that I stayed there, they blocked off all the roads for some marathon walk or something. I was trapped in the house, man. Mm-hmm. It's overrated.
Yeah. All right, this one is from BusinessInsider.com. 61% of millennials said they delayed buying a house because of student loan debt, a new study found. The relationship between student loan debt and home ownership needs to break up. 61%. Please mute yourself if you're not speaking. "61% of millennials said they've delayed buying a house because of their student loan debt, according to a new survey by personal finance company SoFi. The survey polled more than 1,000 Americans ages 22 to 35. But that's not the only major life milestone they are delaying because of student loan debt. Of the survey respondents, 39 said they've delayed moving to another city, and 35% said they've delayed starting a family. Just got finished talking about that. Millennials are facing the great American affordability crisis. They are financially behind from the aftermath of the Great Recession and dealing with a higher cost of living than previous generations were. Student loan debt just weighs these problems down even more. The national total student debt is over $1.5 trillion, and the average student loan debt per graduating student in 2018 who took out loans is $29,800.
That's astounding. That's astounding. That's astounding.
Mhm.
That's just astounding.
A
Astounding
20,
numbers.
a 2019 Federal Reserve study found that student loan debt is linked to more than 20% of the decline in young adult home ownership between 2005 to 2014. The study tracked both an increase in the amount borrowed per student and the numbers of borrowers. The study found there was a 1% to 2% decrease in home ownership rate among borrowers for every $1,000 they owed on average. Nicole also cited a report by Zillow, which studied the effect that student loans have on the ability of an average buyer to afford a home. The study found that student loans cut down the number of homes the average buyer could afford by 10%. It doesn't help that housing costs are skyrocketing. Those buying their first home today will pay 39% more than first-time home buyers did nearly 40 years ago.
Ooh,
There you have it.
wow.
Hmm.
Student loans and medical care are two of the biggest drags on the U.S. economy. I mean, they take so much money out of the economy that it's hard to fathom that until you really start looking into it and seeing the kind of numbers that because you go to college and you end up with $100,000, $200,000 loan, and then when you get out, you get the job for $30,000 a year. You can't afford to pay it.
And then you're buying $100 pair of jeans and you're paying all $25 a week.
Well, like I said, I mean, I have kids, so I'm dealing with this currently. So I'm very aware of what's going on, and it's crazy. But this really more so than anything else, the student loan stuff, because for healthcare, really for the young people, it's not really a big factor. That doesn't start hitting until you start hitting your late 30s, 40s, 50s. But when you're young, coming out where you're supposed to be, developing a family and all of this, this student loan debt and just going to school trying to get an education, it's crazy.
Yeah, but
because it's like a mortgage.
It's crippling the economy. Your young years and your old years. You're supposed to have a lot of money left at your old years that you can buy a new car, sit back, relax.
Yeah, but
and
you
your
got no
young
money
years when you're raising kids and buying a house and all that. And they can't do that in the young years. So the economy is money, and the economy is now slowing. And you can't do it in your old age because the medical bills are killing you, and you can't spend what you want to spend it on. So the economy is like grinding itself into the sand.
Well, the millennials are not coming up with it being a real health risk yet. They're not at that. I think the oldest millennials right now are around 34, 35 or so. But when we start to look at, then that will become a problem, certainly. So that will grind them down, no doubt. But the real issue that we see is just this student loan, man. This shit is a problem. They really have to come up with something. I heard Bernie and these other guys talking about it. So they're looking to address this issue, but that's big, and that's for all of us who have kids and so forth. This is I have children, and this is a factor. This is a huge factor with them. Big. Like I said with my son, with me, save your money, 36 months, move, boom, you straight. That's the plan. That's the only plan he's got.
Indeed.
That's the
Yes,
plan.
indeed. A few grand in a business plan.
Yeah.
Dan, boy, you hit that. I mean, that's part of the problem. I'm serious. The universities nowadays are like Fortune 500 companies.
I mean, but here's the thing. Okay, let's say Bernie Sanders' plan worked. You just got rid of everybody else's student loan debt, but you didn't do anything going forward. I personally think if we're spending all this money on the military, there's no way that we shouldn't be investing in people by allowing them to go to school for free.
That was a
because all we're doing
sacrifice.
is just paying the teachers. I mean, paying the teachers isn't that much money. So where the hell is all the money going?
Well, you got to remember.
MOT, right on the money,
MOT.
and we could underwrite that. We could underwrite all this
Yeah.
stuff, and we could abate that. We've got a whole system set up where we could do this. But it's the greed and the rapacious nature of education right now that is just using it as a commodity, and just the greed behind it. That's what we've got going on, and we're screwing ourselves. It's crazy. I mean, this is madness from what I'm saying. Doesn't make sense.
College
you
is
Germany
completely
go to school for
industrialized.
free. Yeah. You go to Germany, go to school for free. Like, what's going on? Like, how come we can't get this under control?
Because they gave the money to the military back during the Reagan era. That money was forklifted and given to the military private contractors or the industrial complex. And Reagan said, you guys should go pay for your own schooling, and that's how you ended up with this big ass bubble. And people will regard this guy as being the greatest president, at least in our lifetime. And I would beg to differ, because look at the mess we're in now. He gets to go to his grave, and everybody gets to go home with a empty wallet.
Yeah, I
You
mean,
gotta
but those
understand
people
that-
don't know
look,
anything about politics anyway. But it's just like, what you gonna do? Go to Milhouse Nixon? I mean, come on, man. But it's just that at the end of the day, you should be able to invest in people. Like a young person who gets out making that serious type of cash with no student loan is going to be paying a hell of a lot more taxes than they are not, and
Right.
being weighed down by DTI. I mean, because that's all that's going to do is wreck your DTI, and then no matter how much money you make, you're never going to be able to buy a house, pay your debt to income ratio. I mean, the government doesn't win by private organizations running school. I mean, it just doesn't.
But you gotta understand, MOT, that the military now is our lead in protecting. It's not the economy; it's the military.
No, I know. I profit off of it quite nicely, I might add. So I get it. But at the end of the day, man, I don't want these people with these large ass student loans. I mean, can we just get some teachers to just pay them salary and just not buy these expensive ass books? They get the same damn job done. Like, I don't get why I need to be calling $89,000 to go to damn school. I don't get it.
Well, you have a lot of administrative staff. All these admins here, director of career services, and senior advisor here, and all this other stuff. Those people need paychecks, man.
It's the greed of the system. It's greed. They've commoditized their education.
Yeah.
But that's what they've done, and made it a commodity, and they're selling it to the highest bidder. It's greed. That's all it is. Nothing else. We could underwrite all this stuff. We don't want that.
All right, let me knock out this article real quick. This one is from Bloomberg.com. The world's wealthiest families are stockpiling cash as recession fears grow. Rick Stone, a former partner at Cadwalader, Wickersham and Taft, sees treacherous times ahead for family offices trying to deploy cash. The head of the Stone family office said he doubts the bond market will provide any real return over the next decade, that equity markets will suffer a substantial drop and then be flat, and that too much venture capital and private equity money will continue to chase too few opportunities. It's a very hard time for family offices to allocate money, said Stone, 60, whose initial wealth came from class action litigation fees. Stone has a good vantage point on the action, since he runs the bi-monthly meetings of the Palm Beach Investment Research Group, a network of 35 family offices in Palm Beach, Florida. The areas to invest in are fewer, and there is a lot of money looking for those spaces, he said. North America family offices have more than a third of assets and equities. So in terms of fixed income, Europe and the United States are almost close, similar to each other, but the emerging markets are actually scaling out. And then you see equities and private equity. North America is outperforming the rest for all intents and purposes. And real estate, Europe is doing better than North America. And then you have hedge funds where North America just outpaces everyone in commodities. Asia Pacific is doing well, thanks to China. And then cash or equivalent, you'll see that the emerging markets in Europe actually outpace the United States or North America. So they are holding on to their money. I'm not going to read this whole article. They are holding on to them. That Asian woman is thick as shit. God damn. They are holding on to their cash for all intents and purposes, man. I mean, where else are you going to invest it now with this trade war? Every market is slumping. Unless you plan on dumping it into emerging risky investments like Lyft and Uber.
Well, that's exactly what's happening. If you look at the market, people are throwing their money into any kind of Lyft and Uber, for instance. They're making losses hand over. I mean, people just taking the money and throwing out window.
Well, most companies don't turn profit within the first 2 years or 3 years, so that's not uncommon, but it does make you wonder where they stand in terms of their future stability. Facebook did not turn a profit for 10 years before they became lucrative, so keep that in mind.
You see, Facebook was based on ad rev. You know, how many people we have on Facebook and we can sell it to. But Uber and Lyft and all those are actual business. You know, you're providing a service for a cost.
Mm-hmm.
You know, they're selling the product.
Mm-hmm.
Yeah.
All right, let me get to this next article. This one's from CNBC.com. There's a theory that retiring boomers cashing out will cause a dark period for the stock market. Jefferies analysts on Monday resurfaced an old economic theory that an impending wave of baby boomer retirements could trigger a unified move to liquidate equity holdings. Such a mass exodus, so the theory goes, could entrench the stock market in a dark period for years until younger generations save enough to start repurchasing the assets of their grandparents sold. But Jeffries, yeah, I was going to laugh too. But Jeffries' global equity strategist Sean Darby said that the generational shift doesn't necessarily mean stocks are set for a decade of lackluster performance because foreign investors will fill the void. One of the main reasons that investors should not be gloomy about forced selling of retirement plans is that foreign ownership of the U.S. equity market is climbing. Darby wrote in a note to clients on Tuesday. The growth of assets under sovereign wealth funds has caused a marked shift towards global equities as capital controls have been relaxed. What's more, it's not certain boomers will sell stocks and get more conservative with retirees living longer than ever. But there's no denying that boomers will be market force. It's just not certain how they will impact the markets. Right now, workers over the age of 55 years represent a near record 24% of all U.S. employees. That's crazy. One such study on the theory that has raised alarm, and the one cited by Darby, comes from Federal Reserve Bank of San Francisco in 2011, which found evidence that U.S. equity values are tied to the age distribution of the population. Such a relationship, the paper concluded, implies that prices could slump until 2025, until millennials start buying back the stocks their parents and grandparents dish. There has been a tight correlation between population dependency ratios and the PE ratio of the United States stock market. Fed researchers Zhang Liu and Mark Spiegel wrote, in the context of the pending retirement of baby boomers over the next 2 decades, this correlation portends poorly for equity values. Market participants may anticipate that equities will perform poorly in the future, an exception that can potentially depress current stock prices, they wrote. So this is something I never really thought about. Baby boomers taking the exit on the market, and what would the ripple effect be for them pulling out so quickly?
Stock market going back to a more reasonable number than it is now.
Mm-hmm.
Yo, Mike, you know what? Speaking of old age, what do you think Social Security gonna be like 50 years from now?
There won't be no Social Security, man. If you get rid of all these undocumented people who are paying into Social Security now, there will be no Social Security for them for the younger generation to borrow from. That's why, when we talk about ADOS 2050, ADOS 2053, ADOS 2055, that's what I'm talking about. A lot of that stuff is not going to be there. I know a millennial right now who inherited a house from their parents and lost it recently.
Damn.
She lost it. She lost a $500,000 house, having all these trap boys in and out the house. Alphabet boys come in there, seize the house, and now you don't have it. How do you explain that to your parents, your grandparents who held that in their custody since the 1950s?
Yeah, man.
Yeah, well,
I don't trust none of these traditional systems, bro. I just don't.
Mm-hmm. That's why you won't buy an electric car, right? You'll stay holding on to that Datsun.
Yep.
This motherfucker.
Yeah,
but
man.
He's holding on to that rowboat for dear life.
Oh yeah.
Well, I just want to say about the market. The millennials pull out. I don't think millennials are going to pull out. Oh, excuse me, not millennials. Excuse me. Boomers are going to pull out that quick. I'm part of that generation. I don't think a lot of us are just run out of there. But you have to understand why a lot of the market is run the way it's run. It's not run just because we've invested the money in there. It's because many of the very wealthy corporations have put a lot of money in their stocks, done a lot of stock buybacks, stock reinvest, stock buyback, stock. They're running their stocks in the market, consistently doubling and tripling down on them, and that's what's been running the market up. They haven't taken a
quantitative easing.
Okay, so that's it. So when we start talking about quantitative easing, we start getting into open market operations and these types of things that are going for it. You got to understand who's running the market, and that's a lot of the major corporations, the big funds, big investment banks that are consistently reinvesting in their stocks. That's what they're doing. That's what's running the market.
Yeah. Oh, I mean, boomers pull-out game hasn't always been great, anyways.
Well, Mike, you're so funny, Mike. But anyway,
you got these guys running around here with Under Armour shirts, no traps.
no traps, 12 jobs.
Mike, you got what you lack in quality, you got to make up the quantity, man. So, you
That's why Ty City said quantitative easing.
know.
Oh my God, that's really funny.
Yo, you couldn't think of a better scam though, man. It's funny if when you think about it and you wrap your head around it.
Well, the other scam would be what, those DPF filters?
Yep, yep. Thin air hustles. They come out of thin air.
Oh man, let me get to the next article. This one is from the Des Moines Register. To attract new residents, the Iowa community will pay part of your student loan debt. To keep the driver's side window up, Tandy Permenter wedged a wooden doorstop between the glass and the door of her white 1996 Ford Contour. The window had fallen off its track a few times, and twice she paid to fix the problem. Finally, she gave up. Permenter, 34, bought the vehicle for about $2,500 her junior year at the University of Illinois after college. She began teaching 8th grade social studies at Clinton Middle School, and she drove the rickety car as long as she could. When the brakes started to make a grinding sound every time she stopped, she paid $800 in repairs. She got ripped off. In
Sure did.
2014, though, the transmission blew. She turned the key and the engine kicked out. And the engine kicked out a high-pitched growl. She shifted into drive and pulled forward, but the vehicle shut down after a couple of feet. She knew it was time for a new car and purchased a 2013 Chevy Sonic. It lasted me for a long time, she said. Not having a payment was nice while I tried to pay down some of my student loans. Permenter graduated college with $40,000 of debt. Over 12 years, she has cut it in half. But now she is considering a career as a principal or central office administrator. Both jobs will require a master's degree and another line of debt. I just feel like it's a part of life, she said. It probably always will be. But she was heartened last spring when Clinton Community School District Superintendent Gary DeLacy told her the system would chip in. Beginning in September, the district will pay $30 a month towards each employee's outstanding student loan debts. Really? Community leaders hope the benefit, $360 a year per employee, will help them recruit and retain workers in Clinton, a small manufacturing town with shuttered factories and a shrinking population. Elected officials in Clinton County, as well as the cities of Clinton, DeWitt, and Comanche, all voted to offer similar benefits to any residents who will move there. Nearby Central DeWitt Community School District will offer employees the same benefit. At a $30 monthly payment will make only a small dent. The average student loan debt in Iowa in 2019 is $29,416, according to Experian. But the benefit its recipients say is better than nothing. I'd rather just have nothing.
Yeah,
I'd rather,
man.
yeah, I'd rather have nothing. I mean, you got people who can go out and buy a pair of $100, jeans for $25 every 10 days. Why?
$30, man. That is 0.01%.
Yeah, it's
What
crazy.
did it? I mean, like, come on, man. Like, there had to be two worse ideas than that if that's what they ended on.
Mm-hmm.
The other one was probably like $15, and the other one was like $5. So that was like, you know what? Let's just make it $30. Like, come on, man.
Mm-hmm.
I'm wondering what that ragged ass car got to do with this article.
Well, she couldn't afford to buy a new car. That's the thing, right? So she was accustomed not to having any student loan car payments. I think that car was a lemon to begin with. I'm not sure, maybe she should have used CarMax or something like that to go find a car. But
I'm pretty sure
Construction didn't pay $30 for a payment or $30 for any type of repair or anything.
Well, that's what I'm
Not sure how
saying.
$30 gonna help her out with that shit.
If she spent
Wow.
$2,500 for that car, that's probably what she spent for the down payment on the other car.
Mm-hmm.
People
I mean,
just
$800 for brakes, man. She got ripped off, man. Somebody.
oh, that was me. That was me.
Oh, I bet, and you probably spent it on 8 pairs of True Religion.
Oh, that was me.
Boom.
Hey, what'd your boy say? Oh, did I say transmission? That's 2 transmissions. You're gonna need 2 transmissions.
Would you say it was the ball bearings and the muffler?
Yeah. Yeah. It's gonna take a week.
You ain't shit. All right, this one is from the WashingtonPost.com. Student debt is hitting African Americans the hardest. These experts have a plan to fix it.
What
The
expert?
statistic-
Is this a joke? Is this a real article or the Onion?
It's the Washington Post, dude.
The Washington Onion. Okay.
Yeah, this is a joke.
Yeah, the statistics are startling. African American college student borrowers borrow more. College students borrow more often, owe more money, and default more frequently than any other racial group on their educational loans. The racial disparities in student debt are driven by wealth inequality and lackluster funding of institutions that enroll the highest numbers of Black college students, according to research. Concern about the ways in which Black students shoulder the burden of student debt has been propelled onto the national stage during the 2020 Democratic presidential primary race. Several candidates have called for greater funding of historically Black colleges and public universities to reduce the need to borrow, while Senator Elizabeth Warren has said her debt cancellation proposal would benefit 80% of Black borrowers. It is a time of big ideas and bold plans, but politicians are not the only ones with them. Higher education experts are sharing their own solutions to address the disproportionate impact student debt is having on the Black community. Here are excerpts of ideas they have presented. Jalil Mustafa Bishop, postdoctoral scholar in the higher education division at the University of Pennsylvania. The problem is that student loans were presented as a false solution for current and future workers enduring racial capitalism, particularly Black people. The idea was that Black workers' elusive quest for higher wages along with job security and benefits could be realized if they earned a higher education credential. A credential would finally grant us access to the good jobs. However, this did not work. Black degree earners, however, are uniquely underpaid, underemployed, and unprotected. The rampant racism across the labor markets explain our crisis level student loan outcomes. In an effort to escape bad jobs, Black people borrow loans at whatever cost to attend college, no matter the equality. But what if we focus less on Black people getting the good jobs and more on turning the bad jobs good? The bad jobs that pay poverty wages, offer no benefits, and shackle their labor rights all interlock with racist employment practices. If we remove the labor conditions that make that desirable for mobility and necessary for survival, then student loans will become obsolete. This is a call for legislation to create good jobs, increase minimum wage to a living wage, federally guarantee employment, provide universal health care, and strengthen workers, organizing power. As important, we need labor policies that explicitly focus on empowering workers in sectors like caretaking and service work, where Black people already are. So yes, cancel student debt, fund free college, but also make labor anti-racist. To alleviate the Black student debt crisis, we must provide relief on borrowers who are currently struggling under the weight of their own student debt. Ensure real accountability for for-profit institutions, and support historically Black colleges and universities in their mission of educating Black students. This requires broad-based debt cancellation of up to $10,000 for borrowers in repayment. Furthermore, further, we must drastically streamline income-based repayment options by collapsing them to include only one plan that calculates payments based on 8% of discretionary income above 250% of the poverty line and has a repayment period of no more than 15 years. These two reforms would immediately allow borrowers to make basic repayments on their loans, but also begin to build long-term financial health. While the reforms would have been a credible impact for all borrowers, Black borrowers would especially benefit. I'm not going to read this whole thing because I think, and I probably know, that the 1996 welfare reform bill sent a whole lot of Black women to college, and that's who's accruing all this student loan debt.
Don't do it. Don't do
So
it, Mike.
we know that Black men are not in college at the same rates as Black women. So the possibility that Black males are accruing all this debt and not paying it off or not paying it at all is a bit of a stretch and a false narrative. It's not like there's a whole bunch of Black men walking around talking about how educated they are, and yet they have 6 figures worth of debt. This was designed to be the way that it is, and unfortunately, that particular demographic of people in the Black community took the bait.
Psychology degrees for everybody.
Yep. The cost of I can be what I want to be and I don't need a man is very high. That's learning it.
Mm-hmm.
Now you gotta find a guy, find the same man you didn't want, that you put out of college, that you kept out of college. You gotta find him now and try to get him to help you pay off your loans.
Mm-hmm.
ODE. Oh no, you didn't. Oh no, you did. You ain't say that, did you? No, no, you ain't say that. No.
The same guy.
Yes, he did.
Well, am I factual or am I? That's the problem.
Shit.
You know, there's two major problems with this article. It just really only highlights, sort of quasi highlights, sort of what they believe are solutions. Again, I mean, they really kind of crowbarred the whole Democratic platform into the damn article.
Right.
Yes. Yeah.
But there's two major issues I have with this student loan, with the Black student loan crisis. One, they're not acknowledging one of the fundamental reasons why Black students borrow more and more frequently than any other group of students at college. One, Black students are using student loans as a way to keep up with the Joneses.
Mm-hmm.
Two, about a third of this total student loan debt is not carried necessarily by Black men, but Black women. Black women are the ones that are overrepresented in this student loan crisis, not Black men.
Right.
And again, that goes back to the, 96, Welfare Reform Act and all of that. But, if you go on Instagram right now, man, you would just find so many photos and, I don't know, themes or whatever of folks, they're just partying like it's 1999 and you got some bullshit degree in psychology or higher ed or whatever, and you get out and you can't do nothing with it, but you just racked up 80 grand in undergrad student loan debt.
Mm-hmm.
And, and still folks are still traveling, partying. I mean, you see this all the time. Most of these folks got party degrees. And as it pertains to the HBCUs, I'm just going to say it this way, and it needs to be said. HBCUs fail Black students. I'm just going to keep it real. Most of the students who go to HBCUs carry more debt than students who go to PWIs, and that is a fact.
Yo, this just changed my...
if you even when the brother what was his name? The brother paid for the Morehouse.
Oh, Robert F. Smith.
Yeah, when Robert F. Smith paid, they did a study. The average amount of student loans that the students had at that graduating class that Robert F. Smith paid for was over $100,000. That's for undergrad.
Mm-hmm.
And then you talking about you wanting folks to go on to professional schools, go on to graduate schools, get doctoral degrees. You're talking about folks who are already saddled with six-figure debt before they even step into the graduate school or doctoral program, professional programs where you don't have those subsidized loans. So now you're paying, now you're having to pay all the taxes on those loans and stuff like that.
Mm-hmm.
And those loans at graduate school level, they carry a higher interest rate. So I mean, to me, it's a multi-pronged issue. One, it's a cultural issue, and two, it is a policy issue. I think it's insane that you can sign your life away at 18 years old and pick up hundreds of thousands of dollars in student loan debt, but yet there's no equivalent job market for wherever you get your degree in. I know folks with degrees in stuff like community service. There are degrees like that.
Wow.
I can go on and on about this. I'll just leave it at that.
All right, let me get to this next one from CNBC.
Hold on one second. I got a new name for Dr. Phoenix. He's a Surgeon General, man. Surgeon General. Surgeon General here. This is Surgeon General. Just Surgeon General. Goddamn. All right, man. Go ahead, you guys.
Cutting them up.
It's a Surgeon General. Goddamn.
Yeah. Let me get to this next one from CNBC.com. 10 low-cost franchises you can start with $15,000 or less and reap a six-figure salary. According to the International Franchise Association, almost 4% of all small businesses in the U.S. are franchises. It's an industry that generates more than $2.1 trillion and employs 18 million Americans. One of the most appealing reasons to buy a franchise is that you're buying a proven concept rather than starting a business from scratch. The operating details, marketing plan, and advertising campaigns all have been developed and tested by the franchisor. And often you can connect with numerous other franchises to gauge what it takes to be successful. All that convenience, however, can come with a hefty price tag. To open a Taco Bell or McDonald's franchise, for example, you have to have at least $750,000 in liquid assets. To open a KFC, your net worth has to be at least $1.5 million. The average initial franchise investment is $250,000 excluding real estate, says the IFA. And average royalty fees paid by our franchisees range from 3% to 6% of monthly daily gross. Fortunately, there are other franchise choices that cost a lot less to start and still offer you the chance to be your own boss. The Franchise Business Review, a leading market research firm that sort of acts as the consumer reports for the franchise industry, recently identified 10 low-cost franchises that let you get started for $15,000 or less in cash. Many people think you need hundreds of thousands of dollars to buy a franchise business, but the reality is that there are some great low-cost franchises that can provide a very high return on your investment in the long run. Let me just go through these. Okay, Dream Vacations, $9,800 for startup costs. Complete Wedding Events, startup cost is $10,000. Show Homes Home Staging, startup cost $10,000. Photography is $10,500. Cruise planners, $10,995. Motor mortgage is $12,500. Wow. So I'm not seeing anything that's all that shocking, but what I will say is that who just dropped off? Yeah, what I will say is that I think owning a franchise has its perks, but I also think that if you're ambitious enough, then what's going to happen here is that you may not keep that franchise. You may end up going to start your own thing. That often happens. You know, we've had several places that have shut down from a franchise standpoint. I think it was Papa Gino's. Man, one day we just woke up and it said it's no longer in business. But just the day before they were serving steak and cheeses. Like, what happened? Nobody knows.
Just like that, gone.
Yeah, it made the news. All of them shut down.
Yeah, I do remember seeing that, and I don't know the reason as to why they did it. I do remember seeing that. You're right.
Yeah.
You're
I
right.
don't know what happened.
He's right.
That's a lot of upfront costs, man. $750,000 just for a franchise.
For that restaurant? Come on, man. It's ridiculous.
Yeah.
Because
I think food trucks are the new move, man.
It is. It is.
I know food trucks right now that are pulling in $2,000 on a summer day for 4 hours, just in the business district.
Oh, they got food truck parks down here, bro.
Yeah, that's what they have up here in order to keep them away from other brick and mortar businesses. Yeah, they complain big time about that. They don't want you setting up shop right across the street from them. That's not fair to them.
Oh, they putting up on construction sites.
I think the thing that you want to consider, obviously, from a business standpoint, you're not just looking at costs, whether or not it's cheaper or more expensive. Obviously, you got to shop within your budget, so that's going to be a limiting factor. But once you actually establish that, maybe you can secure some investors if need be. But you want to look at what is the actual net profit, because you can have something that costs a lot up front, but then it makes a lot. So then it would make sense. But then you can have something that maybe costs a lot, doesn't make a lot, but is low risk involved. Okay. You don't have to spend any money on marketing. Like, say, for instance, the Cheesecake Factory, an exorbitant amount of money up front, an exorbitant amount, it's multi-millions just to start up a Cheesecake Factory. But you don't have to market it at all. I mean, you put a Cheesecake Factory up, it speaks for itself. People there's brand recognition associated with it, and you're going to generate business if you put it in the right location. Now, a food truck, very, very low upfront costs. Even though you don't make as much money as a restaurant, if you put in the right location, the actual net income versus the amount of money, the amount of capital you put into it, it's a no-brainer if you have the desire to actually do that.
It depends on what you're selling too, because I know the only black food truck I know of is Jamaica Me Hungry. Me Hungry, but that food truck, man, they make a killing. They got like 4 now. They got 4 trucks now. So that goes to show you how successful that it can be. They started off with just a van, and then they went into one of those what is not a quarter ton? What do you call those trucks?
Box trucks.
Yeah, the box. Yeah, they went with a box truck.
But you know what though, Mike? See, here's the thing. The key about a food truck is a lot of people don't take advantage of the actual concept behind the food truck. The concept is that it's mobile. Yeah. So if you have a food truck and you leave it parked, you never move it, you're not taking advantage of the benefits of having a food truck. Like, case in point, I went to some type of gospel fest here in Tacoma area, south of Seattle, and there were food trucks lined up, and they were running out of food, and the lines were like, I'm talking about, some of the lines were an hour wait just to get something from a food truck. And so it's like,
just one?
Huh? Excuse me?
Was it just one?
No, there was probably maybe 10, 15.
Oh, yeah. Because food trucks are only designed to serve a certain quantity of people. It's only meant to serve 25 to 30 people.
Well, and that's just the thing. Like, if you have a food truck, most of those, a lot of those food trucks that have either a V8, a lot of them have the diesel engine. Like I will be pulling a trailer behind it. Like I will have a trailer, like for an event, you pack up a trailer with like, food so that we can, you don't have to make any runs. You can just cook. Like you go to an event like that. I mean, in an event like that, especially when the demand exceeds the supply, you just start price gouging. Like, it sounds bad, but me, listen, I will do whatever it takes.
It's trendy. Buying from a food truck is very trendy right now. Before, like, if you go back 10 years ago, people were like, I want to eat out of there. There's roaches in there. There's cockroaches in there. It's all dirty in there. It hasn't passed inspection. What they have found is that food trucks are cleaner than most restaurants because they have to be meticulous.
Yeah.
They have to be meticulous, man.
Well, especially for a food truck, what's the likelihood of a rodent to actually nest in a food truck? You see what I'm saying? Like the actual structure. Yeah. There's more areas that like a rodent can bore into. There's more wood and things like that. A food truck, a lot of the construction is metal.
Yeah.
And then on top of that, it's smaller. There's not a lot of extra crevices and spaces in between panels. Like a house, there's actual insulation and there's areas in between the walls where rodents can nest. You don't have that with a food truck.
With food trucks, what we found, because I worked on this maybe early last year with the Ujima project, and a lot of those food trucks are actually leased seasonally and actually yearly. So the upfront cost is very minimal. So you're only paying about $800 for the lease at best.
Oh,
damn.
And then
check this out.
Then you're throwing on your graphics. You go to a graphics designer. They just slap it on there, and all the kitchen burner, the stove, and all that stuff is already built in there. You just need to fire it up.
I've never heard about
that,
rats hanging out in trucks. I've heard of them on ships and another type of environments, but rats in trucks, I've never heard of it.
But even beyond a food truck, there's a barber that I know. Actually, I know two barbers. They have barber trucks. So when there's special events, they take their truck out, and one guy's barber truck. When I say that he actually he did the work himself. He bought the truck used. He bought it for I want to say he bought it for $1,000, like an actual big box truck. Mm-hmm. He actually outfitted it. It has wood floors in it. I mean, like all high-end appliances, a sink and everything like that. It has a water tank. I mean, it really is looking high-end. And then he's able to actually, go to specific events like sporting events. He goes to some of the games. What's that football team? The Seahawks. He goes to the Seahawks games, and he actually parks his truck and he actually upcharges. So when he's in front of the game, he charges sometimes $50, sometimes $100 just for one haircut. So he really cleans up. So, I mean, just being mobile, like if you have like a business idea and you want to minimize your upfront costs, look at something like a mobile, like a truck, that may be a good idea depending on your business model.
Yeah, we're starting to see mobile mechanics now. A lot of brothers decorating
Definitely
their trucks. Yep, decorating their trucks out. And they pull up to your house. They'll do an oil change for you. They'll swap out your alternator, do your water pump for you right there on the spot.
You know what else? MOT will probably like this: mobile dating coaches.
Oh man! Oh my God!
Yeah.
Yes!
Yeah.
Finally!
Super Triz, you ain't shit, man.
Yeah.
I'm starting to see mobile car washes, guys pulling up in their trucks and they pull out the high pressure hose and they just go to work, man. They're in and out within a few minutes.
Yeah, they're getting contracts with dealerships too around here. I see them on the weekends, on Saturdays when the dealership closed. They be out there with them pressure washers.
Yep.
And then you got mobile tow trucks for junk cars, right, Ty City?
Absolutely.
With junk RX-7s and junk Datsuns.
Walk right into it.
All right, man. Let me hit this last article, man. This one is from CNBC.com, man. Tackling the wealth gap from home ownership rates to inheritance. The wealth gap between Black families and white families is widening. Former NFL player Jason Wright is now a partner at the management consulting firm McKinsey. he's co-authored a new study that looks at some of the causes that some of the causes and has some solutions that could narrow the gap. I never heard of this cat, man, playing in the NFL, but whatever.
I think Mike is having some technical difficulties.
Me?
Oh,
Oh yeah, the screen share is gone.
you got quiet and screen share went away.
Oh, because there was no article to it. It was just a caption.
Oh, okay. What the heck is going on?
I thought you said, man, screw that dude. He never played for no team I know of. Next article.
Well, he could, for all I know, he could have played in the Arena Football League or something. Yeah, there's a comment in the chat from Kenny Burgess. He says, "I'm a mobile dog groomer in Los Angeles. 10 years in, started at Petco, saved my cash and split." These trucks, man, I'm telling you, these trucks. These trucks. People are not buying these trucks. They don't buy them. They lease them. And when they're done with the leases, can go anywhere from 1 year to 7 years, depending on how good the business is. And if the business is going to be successful, you predict that it's going to be successful, then you usually keep it longer. But if you think it's going to fail, you have that 1 year lease. So we used to, and back in 2012, we had 15 food trucks in the city. Now, as of 2019, there's 200 food trucks.
Ooh, wow.
And they had to designate these zones, these landing zones for these food trucks where they can occupy at, and they have to go by the schedule. So you can't just pull up anywhere just because there's a food truck zone. It has to be designated for you for that day. But all those trucks are cleaning up, man. They are cleaning up. I know one truck that's pulling in $2,500 a day on summertime.
Wow.
In the
That's a lot of money.
In 4 hours. They do it in 4 hours.
Wow.
Yeah, killing it.
I might have to start a mobile hotep hustling, and and then I'll offer simping services for strong Black sisters.
Wow. Mobile simping? Wow.
Only for strong Black sisters. Only for strong Black sisters.
Well, yeah, you can elevate them to their third chakras of that Kundalini energy.
There you go.
Yeah, man. So, yep, I've met another guy who has his own mobile phone and tech repair truck. So basically, it was an old ice cream truck. I think he just gutted it out. But for all intents and purposes, he has a window. He kept the window that you slide back and forth, and basically you drop your phone off, a shattered screen or new case you want to put on it, and you pay for it right there on the spot. So
yeah, go visit these college campuses. He'll never be short of work.
Oh yeah. Laptop repairs, all that stuff right there in his truck. He's not missing out on anything. He just keeps driving around all day long. So I think there's opportunities here that need to be researched. But food trucks, for all intents and purposes, man, is the business right now. Going out and getting a franchise, that sounds nice, man, but I'd rather put that 20 grand behind the food truck, man. I looked on eBay, man. They got these I don't even know what's the proper term for them, but they got these carts, man. I think they're like temp carts that hook to your back of your to your tow hook on a truck. And basically, let me see if I can pull it up on eBay. I see
like a travel trailer sort of thing?
Yeah, something like that, but it's already done up for you.
Yeah, it's like a travel trailer, but like a moving trailer. And when you open up one side, the inside is already completed.
Yep.
Yeah. And well, one thing, Mike, veterans, especially if you're a disabled veteran, you can in New York City, a couple other cities on the East Coast too. You go in there, you get your license, and you get the city would help you pay for your thing, and they give you a spot above. I mean, in front of anybody else. Disabled veterans get the choice of where you want to locate. If they have an open spot there, you get it first.
Yeah, they have
Nice.
a similar program in my state in here in Wisconsin, and yeah, I mean, there's a lot of incentives if you're a veteran to get into this business. I mean,
This if you're looking at the screen right now, these were what I was referring to.
oh, okay, oh yeah,
Hey, Mike, while you're at it, see if you can find an actual, like an entire food truck. I think the prices may actually be comparable.
Yeah, they are on here. We've done the research a couple years ago on this for Ujima. But these are if you buy them wholesale, right? But there are dealerships here that actually do just that. They do food trucks and they lease them out.
mm,
So you would buy it if you if you had the cash readily available, but for most people trying to get into the business, they don't really have the cash. So let me see if I can pull up on this one right here.
yeah. There's actually there's some Latinos that they have a food truck set up right outside the parking lot of the Walmart. That's about a half a mile from me. Every single day they're out there, and they got long lines.
The most lucrative thing I've seen sold is tacos, man. People seem
Yeah.
to really love
Oh
tacos.
my God, yo, yeah.
Yeah. I mean, that's what they sell. They sell tacos, burritos, pretty much anything you can go to a walk-in Mexican spot and get. They selling out of a food truck, and they don't have a shortage of customers.
Hey, but one of the best, those best I ever seen was this Spanish lady, right? The entrance where the employee entrance is Miami Airport. She parked her hot dog vehicle right there. Every day she's there in a bikini. And there is a line. I mean, it's always 10, 15, 20 people deep.
That's gotta be like a one of those YouTube prank videos, right?
No, bruh. I saw it myself. I see it myself. I'm serious.
Did you
This
buy
lady-
anything though?
Nah.
I would certainly say there's certainly a market for a lot of the Caribbean cuisine.
Oh yeah.
I've seen a number of folks who were Jamaican had food trucks, and they were selling jerk chicken and all that stuff, and yeah, they were cleaning up too. So I mean, there's certainly a market for many of these ethnic cuisines.
Yeah, they should get a food truck and pull up in the manosphere and sell a lot of jerk chicken to a lot of these cats up in here, a lot of jerks up in here.
Yeah.
A lot of jerking off too.
Dayton Coach Chicken.
Oh yeah.
Coach.
General Chow. Yeah, but we looked into this, man. I did research on this with a group of people, man, last year, man, and we found out what the upfront cost is, and most of your cost really comes from your food because it's perishable, and if you don't sell it, that's a profit loss.
Yeah, you certainly, if you're dealing with a lot of vegetables, you want to try to get through that in a day, especially if you're out there in the summer. You don't want to be trying to resell vegetables the next day and stuff like that. You want to try to get through all of that in a day.
And then you want to diversify your payment options. Like, now you can get, man, I will be accepting Cash App, whatever, Beta Mail coins. If you got Beta Mail coins, I'll take those too.
No. Cryptocurrencies.
Oh yeah.
Trick.
Yeah. But you factor in, you're only working for 4 hours. You work from 11 o'clock in the morning to about 1:30 in the afternoon, maybe 2 o'clock at best, and then because lunch is over at that point.
Yeah.
Lunch is over, man. So whatever you're selling, it has to be simple to make really quickly and have to be making it in large quantities.
Yeah, my brother does something similar to that, like in Derby or what is that? Kentucky Derby. I mean, man, he goes down to like Mississippi, buys up like 1,000 pounds of catfish, brings it back, and make like about 10, 15 grand in a weekend, and that dude's set for months. Crazy.
Damn.
Does he sell shea butter too?
Yo, you laugh, man. You laugh. There's a dude and a chick up here who got a beauty supply van, and it's set up just like a food truck, but
Where you at?
Excuse me.
You talking about where you're at?
Yeah.
Oh damn.
Oh, so that's probably where Rude Imp got that Moroccan argan oil that he rubbed on his chest for his picture. You seen his stream now? He got his shirt off with his actual avatar.
Really?
Moroccan argan oil rubbed in. Shout out to Rude Imp.
Yeah, man.
Rude Imp trying to get chose.
I don't know, man. Everybody in the manosphere seems to run around with their shirt off, man. I don't know what's going on, man.
I called Edward Anderson on the stream too. I let him have it.
Oh yeah. Yeah, he was walking through a store one day, man. He was cussing me out, man. He had his shoes untied, man. I said, Edward, man, you should tie your shoes. You be tripping out here. He got mad. They banned me. They fucking banned me.
Listen, Edward Anderson was in his car doing the stream. He had his shirt off and a seatbelt on.
What, was he in the Gerber seat?
I don't know.
Edward Anderson was driving around with his shirt off as well?
Shirt off with a seatbelt on.
Oh,
Are you sure?
Are you
Oh
serious?
yeah.
No, I don't believe it.
No. Listen, you can ask Edward Anderson himself. He had to. I got on so bad he had to take the stream down. Listen, I nicknamed him. D'Angelo Panderson. Like AKA light brown sugar.
Like
Yeah.
Bro, that's like winning the war whenever you get banned. Somebody take a video down or something like.
Well, I mean, he is pretty swole, right?
Ooh.
like you bugging, bro.
Guys, the killing me tonight.
Oh my god.
You know what, Triz? You should have got him an Under Armour shirt. One of those villain ones, the Captain America ones or whatever it is.
Get the red.
Yeah.
Cats running around the manosphere with their shirt off.
Yeah, folks. Yeah. I've seen a few folks jumping out their shirts now. I'm wondering what that's all about, man. That's guys coat out their shirts. It's an interesting look.
Yeah. And then they come to the Black Brain Trust talking about hook me up with a job, man. Like, man, you in the wrong place, bro.
Yeah, man. You know the black manosphere lately. The black manosphere done got real spooky. I mean, you got cats with their shirt off, rubbing oils on their chest. You got cats about other men's breast size. I mean, it's real spooky around here. I mean,
well.
You said the nigga had a seatbelt on? Where was he going?
He had his shirt off with his seatbelt on.
Where was
his seatbelt on? Strapped across his chest.
Oh,
where was he going?
He said he had been doing yard work or something.
Oh man, I don't believe this shit. What?
Oh man, nigga said some yard work.
Yeah. Oh wow.
What is he, a yard boy?
Oh, that's nuts. A seatbelt on your raw? Nah, bro.
Yeah.
Yeah, these cats wild out here, man. Wow.
Yeah, you manosphere, man. The manosphere is crazy, man. I'm hearing so many things just this week alone, man. But this is news to me.
Hey, I caught Mr. Fantastic slipping too. He was trying to stream with his shirt off. Yeah. Hey, listen, everybody getting caught slipping. It's getting real spooky around here.
All right, so I'm keep my shit on.
The guys covered out their shirts.
Hey, summertime over, Nagone. What they doing?
Summertime's over, man.
Man, it's cold out. I don't know. Hey, listen, I don't know, Mike. I don't know if it's cold where you at, but in Seattle, it's cold right now. You gotta have
it is cold up here. It is cold. It's hoodie time.
Shirt on, fam.
It's hoodie time.
Cats covered out their shirts. This is too much.
Yeah, I mean,
and then here's the thing. Listen, I know Edward had his shirt off, but I don't know if he was wearing pants or what, because the camera was from the waist up. Ain't no telling what he had on below
that. No. Hey, can you imagine somebody FaceTiming you, bro? Your partner got his shirt off. He driving with. Nah, fam.
Listen, hold on. Let me tell you something. If you FaceTiming me, number one, you better have a shirt on. You better not be laying on your stomach. Don't lay on your stomach talking to me.
Hey, yo.
And have some clothes on when you talking to me.
Hey, Triz, my man. You
laying on your stomach trying to have a conversation.
He got no shirt on, bro.
I don't think men have no business FaceTime.
I was looking at one of BGS's chats, man, and this dude was on there with no shirt on, man. And I was like, man, what is going on here, man?
Was he laying on his stomach too?
Nah, I think he was. I think he was in a hammock.
That's crazy out here, man.
I think he was in a hammock or something like that, man.
Oh, Jesus Christ.
Well, it is that time of the year where folks start to get a little weird and stuff like that.
I'm talking about they laying on their stomach.
Hey, Mike, what you say this dude was laying in a hammock?
Dog, a seatbelt on your raw skin, dog. Don't do it, fam.
Oh, no. No, dog. Oh God, dog. No.
I think he had the Gretty seatbelt pads on there too.
Oh man.
He was laying in a hammock eating strawberries, talking to other men. Like what kind of nonsense that's going on?
No.
Yeah.
Damn. This shit is
don't talk to me while you eating fruit. You can't eat fruit.
Next level.
You can't lay on your stomach. You can't have your shirt off.
Yo, hey, Super Triz, you laying on your stomach with your feet going towards the sky.
Yeah.
Oh, shit. Oh, no.
Twiddling your feet.
No, please. Oh, no.
And listen, and look at you on your you on your belly, on your elbows, with your chin cradled in your hands.
Hey.
You got cats running around with no traps, no rhomboids.
And listen, they on their belly. They on their belly with puppy dog filter on their dog on camera. They on your belly with a puppy dog filter on your camera. Don't talk to me.
Yo.
You know what? I think I know who Super Triz is talking about, because I watched a few months back. This one cat, somebody said something to him.
Yo, that's that. No, you hang up.
Oh man.
The warrior class of the black community, baby.
Yeah.
Oh man. Respectability politics, man, over there.
Oh my gosh.
Y'all better get up out of here.
Oh Lord.
Y'all better get up out of here.
No shirt though. This is too much.
But you gotta understand that K. Michelle is one person and she only speaks for herself. That's sucker lady over there talking that stuff like that.
Sucker lady.
Sucker lady. Ain't got no rhomboids, no lats.
And they got puppy dog filter on the camera and they with the tongue hanging out and the dog ears.
Oh hell no, man.
Oh, we gonna die.
Lord.
Yo, Xanatos Clutch said that wasn't a seatbelt, that was a man purse.
A Merc. Fucking Merc.
Oh, fuck.
Oh,
Oh,
I'll finish, bro.
Yeah.
Oh, Jesus.
What got the nerve to have a rainbow filter on their picture.
Oh, what
Talking
the-
about we are one.
With the fake prescription glasses.
Yeah,
My Little Pony shit?
it's real weird out here.
Obviously,
Manosphere, man. Manosphere is real weird, man. Cats
Yo.
complaining.
I mean, Edward
Cats-
Anderson had his shirt off with a bow tie. Like, how you have a bow tie with no shirt on?
Oh, don't do that, Triz, man. Because I mean, there's cats out there, man, going to you know, fill their advice show, looking for subscribers, man.
Yo.
You know, ain't getting no subscribers from him. No
Yo.
traps, no ROM boys, no lats, no pecs.
No.
I don't know these cats. I just
Oh, my
been
God.
privy to some of these hangouts. I've listened in on some, and yeah, there's some. I don't know. There's some weird, strange shit going on. I don't know.
Oh, yeah, socks pulled all the way up to your kneecap.
Mesh shirts on. Cats got on mesh
Yo.
shirts. Cats up here
It got to be
wearing-
a pre-check before you go live on these goddamn YouTube,
Socks
man.
pull up to the knees. Oh, man.
With the gold toe. Make sure he knows which way to put the socks on, man.
Oh, man.
Oh,
Oh, my gosh, man. Y'all
These cats need like
Negroes is fools up
you
in
know,
here.
these cats
Oh,
need like a shadow buddy or some shit, so they don't be going out here only going live on camera and shit looking stupid.
Running around with Timberland boots in the summertime and ankle socks like I'm chilling.
ankle socks and an ankle bracelet.
Oh, man.
dog. I'm finished, bro. But Triz, hey,
Huh?
when you was roasting fantastic, bro, hey,
You saw that stream? You saw that stream I did on Mr. Fantastic?
no, I couldn't even finish the damn thing, bro.
No, I had to listen, hold up. Listen, it's all in fun, but we got to have checks and balances. Like when I see somebody stepping out of line, listen, I got to let them know. You know what I mean? Like I mean, did you actually see the real stream that he did with Taz?
No, I refuse,
I
bro.
saw
I
it.
refuse, bro.
I saw it, man. It was some real.
That stream. Where Mr. Fantastic living in Atlanta? Where he from?
I think he's from Georgia.
Yeah, see, well, I don't know, man. Is he in Atlanta? I mean, it's kind of, I don't know.
Nah, man, don't do that.
You have to have
Fantastic,
intervention.
man.
You have to have
Don't do that to
intervention.
fantastic.
I like the brother a lot. I like the brother, but I did see that stream he did. I think it was over at O'Shea's or whatever. And yeah, that conversation went off in the weeds real quick.
No, it took a turn for the worse. I mean, it went from an argument to all of a sudden, I heard Mr. Fantastic talk about, you know, what size is your chest? Then he said, he said, man, if me and you was in a room alone, I bet you wouldn't be talking like that. I mean, it got real.
Oh, come on, man. We got to end the stream now, man. We got to end the stream now because they're gonna flag us. They're gonna flag us for this. So,
That's 3.0, bro.
all right.